Good morning, everybody. Welcome back to another episode of The Market Open. It is Monday, January 13th, 8:47 a.m. Thank you, everybody, for being with me here today. We are getting started with the second trading week of not only January, but also of 2025. And if you've looked at your portfolios at all this morning, you've seen probably a little bit of red. And the reason why you've seen a little bit of red is because, well, in particular, not only is the market down, but the dollar index is at 110. It is at the highest level since 2022. We got to 107 last week, 108, 109. This morning when we touched 110, that's when the 10-year touched basically 4.8%. And that's having some issues for equities right now. So, I mean, that's kind of the story of the day in terms of why the markets are down right now. Dollar's falling just a little bit as we get into the beginning of the show, 109.79. We were at 109.97. About 30 minutes ago. But that is why we're seeing some of the red currently that we're having right now. There's a lot to discuss about this red, why it's happening, implications of this red, what it means going forward into this week. But nonetheless, that is kind of the top headline for why equities are down. This week's going to be really important. Why is it going to be important? Because we are starting off two major things that are going to define the trajectory of the stock market going into 2025. Number one is going to be earnings. Banks, Goldman Sachs, Morgan Stanley, Bank of America, Wells Fargo, Citigroup, all these banks are going to be reporting earnings this week. Jefferies reported earnings last week. They increased their dividend by 14%. It was one of the best earnings we saw to begin the financials. So the rest of these banks are going to have a lot to prove in terms of, can they increase their dividend? Can they increase their buybacks? Can they actually benefit off M&A and IPO? So I think a lot of people are going to be looking forward to seeing what the banks are actually saying about the state of the economy. And then we have CPI coming in on Wednesday. And we've got a lot to talk about in terms of CPI, what it means. I actually think that the market's kind of pricing in the worst case scenario for CPI. And if it's worse than that, then yes, we can head lower. If it's just in line with the expectations, then maybe the market can kind of chill a little bit. But CPI and earnings this week are going to be very, very important. It's going to define kind of the trajectory of really the next couple months in terms of if we're going to get a rate cut or not. And that's going to be very, very important when it comes to what happens to the broader market. Having said that, there is some volatility that we are seeing in the pre-markets. We're going to get into all of that, discuss what's happening. We got Tom Lee talking about some stuff. We got Bitcoin going to levels that we haven't seen in basically a month, teetering just below 91,000, almost at 89,000. It was at 90,183, but now we're back to 91 right now. And then I want to discuss my thoughts on if this really is time to panic or if this is going to create a pretty decent opportunity if we get some more headwinds to get, amazing stocks at amazing prices if the macroeconomy is willing to give it to us. So we got a lot to talk about and a lot to get into. Thank you, everybody, for being here. Hopefully you guys had a great weekend. I actually had a pretty productive weekend and I got a lot of stuff done. So happy with the weekend and ready to get back into the second week of trading. Good morning, everybody. Midwest, Dean, Sachin, Ray, ER, what's up? Good morning. Crowd Control, Lewis, I'm Beneficial, Martin, good morning. Thank you all for being here today. June, Justin, Nick, a little bit of red. I smell blood. Well, it is a little bit more than just a little bit of red, but I think there are some interesting signs right now and some pretty basic signs for why maybe this red doesn't last as long as we think, or if it does last, maybe it's a little bit more quick of a downturn than some people think. Now, granted, we're going to also discuss the bear case and why this red can continue. So we're going to get both sides. Why could this red be one of those flash crash red type of moments that we see this week, next week, and then we have some macroeconomic tailwinds to move us forward? Or could this be a sustained downturn? One thing I will say before we get into it, every dip so far in 2025 has been bought, and that might not make sense on paper because we're down to start the year, but in general, when we've had a red day to start off the pre-markets or even at 9:30, intraday, we get dip buyers coming in. Like, you don't get Robinhood falling all the way to 34. It falls from 43 to 40, and then it rebounds to 41, or 40 to 38.70, then it rebounds to 39.50 to end the day. So there's not a sustained downward momentum on a lot of equities, or at least there hasn't been in the first 13 days of January. Today's going to be a new day to see if we actually get continued red or if people step in and buy the dip. And so I think that's going to be another story of the day that's going to be very, very important to see in terms of how that plays out. Alex, Tam, Ned, Niels, thank you for being here. Good morning. Erwin, what's up? Just failed a deadlift set at the gym. Oh, I did go to the gym. Let me just get that out of the way. I did go to the gym. I took a picture of myself at the gym. That's another reason I'm happy this morning. I look crazy in this picture, but I did go to the gym. There you go. That's me. I got the workout in. Wasn't like the craziest workout, but I got up this morning. I was early there. And now we just have to start the trend to do it every single day. All right, let's get started. We got a lot to get into. But before we get into everything, that is not an old photo. That is literally this morning. I texted it to Adam. He'll confirm. I texted it at like 5:45 a.m. So he'll confirm if you guys don't believe me. Before we get into everything, we got a lot of stuff to talk about, a lot to get into. We're going to start off with Tom Lee. I do have an announcement to make. And that announcement is that sometimes in life, things don't go your way. And the only thing you can do is work really hard to get things to go your way. And for the past month now, StreamYard has not been allowing a tradition on this channel to go my way, which is they've been suppressing, better yet, I should say oppressing, my bell, which is a major part of this channel. And so because of this reason, I spent a good 7 hours on Saturday figuring out how the hell to get my sounds, my precious sounds, onto the show. And, you know, again, sometimes life doesn't go your way and you really stick it out and try to figure, you know, in the course of however long it takes, how to get something to work. And then at the end of those 7 hours, you end up feeling really accomplished because you figured it out. And ladies and gentlemen, we have officially figured it out. But not only have we figured that out, I hope this works. If this doesn't work, it's going to be embarrassing. We've also figured out some other things. So let's just say throughout the rest of the trajectory of the market open for hopefully the next 30, 40 years that we're doing this, we're going to have some audio. We're going to have some audio experiences. So for example, when it's time to laugh, we're going to have Elon laughing. When it's time to make sure that Bitcoin is none other than the second best, or only the best because there is no second best.
What's the second best? There is no second best.
There is no second best. And when AI is taking off, we got to remember.
In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m.
And sometimes when stocks are falling really badly on earnings.
No.
It's a new era. It's a new era in the market open. And finally, when things are going great.
I'm gonna come.
It's a new era. It's a new era in the market open. Let's get into Tom Lee. He's on CNBC this morning. He has some thoughts about this sell-off. Let's hear what he has to say, and then we will keep going from there.
Strong jobs report boosted the case for the Fed to hit the pause on a January rate cut. Joining us now is Tom Lee, Fundstrat Capital CIO, head of research. He's a CNBC contributor. And I referenced you earlier, Tom, because I do remember you sort of being positive overall about the market and for this year, but with some trepidation near term. And most of your calls recently have been less on the strength of the economy and more on inflation data. And some of your, like when you were calling things, S&P's going to end the week, 8% higher because of inflation or something. So we got inflation this week. There are concerns. I think I tie a lot of the weakness in the market to that. Are these important numbers?
It's important because, as you know, we've been correcting now for almost a month, right? 23 trading days. And this Wednesday is an important day because it is a possible turning point for markets. And I would like to see CPI come in below, 0.25 or so. And I think that would give that jolt of confidence for markets on top of, I think, earnings, which is going to be a positive catalyst. But for investors in the near term, I think they got to ride out the volatility because I think yields here have made people nervous. Not necessarily deteriorate the long-term outlook, but near term.
Are they smart, the yields, or are they not giving us a correct signal? Because you sound really like you're not sure about the inflation data this week.
I'll have a better sense over the next couple of days as we sort of finalize what our expectations are. But the only hesitation we have is that the hurricanes last year have muddled some of the inflation quality because, for instance, hotel reservations would go up because of these natural disasters, and it's going to happen now with the LA fires, and I think it's going to muddle used car prices as well because you have to replace all these used cars.
So you think if they weren't muddled, that inflation isn't that big of a concern? And when you say a turning point in the markets, if we've been down for a month, turning point doesn't mean further weakness. You think we might be making a bottom this week?
Yes, our technician Mark Newton thinks 5,700 might be the turning point. It could happen Wednesday, so maybe 2% down from here, but that's really where the market could make a...
So that's interesting. We talked about this last night on the Sunday Future Show, but Tom Lee thinks we could make a bottom this week, and there's actually some data to support that we're going to talk about in a second. But if we make a bottom this week, 2% down, then 5,700 is where he thinks the dip really ends up becoming where you buy.
I think if we could lift the cloud of some of this muddling, in fact, Waller last week even said most of the inflation last year was about imputed prices, meaning the real price of inflation was actually much lower. I think that is still the case. Inflation is weaker when you look at housing, et cetera. So once we can get through that noise. But investors, I think, shouldn't be too glum. I think earnings season is going to be something that really solidifies. Look, if S&P earnings growth is 10%, X energy and revenue growth 5%, that's a really good reason to be owning equities.
Is the Fed less significant right now with their rate cut? I don't care whether they, that's not what I base what the market's going to do on. Are people still just dying for another couple of cuts, or I think we're lucky to have gotten what we've already gotten. We got to live with that and just try and hope inflation doesn't come back.
I agree with you. I think the best case this year would be the Fed doing one cut because the economy is strong enough and they're still dovish, meaning they're going to make their way to neutral. But if they push those rate cuts into 2026, 2027, that's a longer run rate to support markets. Part of, I think, the hesitation for stocks right now is we have a new administration starting.
What? Oh, that's right.
Yes. And, we essentially reversed that rally from November because we rallied 7% over 23 trading days, and now we've given up 5%, and another 2% would just round trip us back to November.
In 23 trading days.
Do you think stocks look expensive here or not? I mean, we've come back down, as you mentioned, but people keep talking about the PE ratio and how it's historically at the high end of things. Do you think it's expensive, or do you think we have the earnings power to support all of that?
To me, the 10-year, even if it gets to 5%, is a 20 PE multiple on a 10-year bond. The median PE on the S&P is 17 times. So I think stocks are giving you much better value than a bond right now. And 5% is probably not the level that yields stay at. It's probably a deflection point.
Tom, what is the movement in Bitcoin say to you? So we're at 91,000. What is that? What is that a signal or a sign of anything in this sort of analysis?
Stupid Fed.
Yeah.
It's not cutting.
Yeah, Bitcoin's down roughly 15% from its highs, which for a hyper-volatile asset is a pretty normal correction, and it is slightly following global...
And I want to highlight that real quick as well. He is right about that. Well, we'll talk more about kind of my thoughts on this pullback that we're seeing, but for Bitcoin to only be down 15% from its highs for something that compounds at 60% a year, I mean, you've got to just naturally realize that that is pretty normal and probably pretty healthy for the asset class in and of itself. Now, he's going to talk about where he thinks Bitcoin goes over the next year, but 15% down can't be something people complain about when Bitcoin was at 20,000 18 months ago.
Liquidity, but we're pretty early in this halving cycle. So to me, I think Bitcoin in the near term, again, our technician thinks 70,000 is where we can sort of make a stand. Means you're getting a big opportunity because I think Bitcoin's going to be one of the best performing assets.
So hold on, but you still think it goes all the way down to 70,000, or you think that's the floor, in which case you would still buy at this price?
Yeah, so there's Fibonacci's. So one level would be 70.
Let's say that again.
There's retracement levels. So you pull back from where you rallied.
Right.
So 70 is one level. It could go to as low as the 50s. But that's, again, not a new level. It's just where it touches before it begins to rally.
Okay, let me ask you a different question. For those folks who are watching who are not in Bitcoin or are thinking about buying Bitcoin at these prices, are you saying that this is a fair and good price to get in, or are you saying wait because you think it's going farther down?
You know, Bitcoin is something you need to be long-term focused. I don't think anyone's going to lose money buying here at 90. If they're trying to time this, maybe they'll get lucky and it goes to 70. But to me, Bitcoin could be significantly higher this year, maybe 200, 250. So I think 90 is still a good entry point.
Okay, so let's discuss the analysis we got from Mr. Tom Lee, and then we'll get into some of the other macro stuff that we got going on this morning. So first of all, for everyone who's here, good morning. Thank you for being here. Stocks are down in the pre-market. They're slightly up from where they were at around 7 a.m. I was up at around 5 a.m. At 7, I think we, at least in the pre-markets, had a little bit of a bottom, and now we're rebounding a bit. We'll see what happens at 9:30 when we open up. But essentially, Tom Lee's argument here is that we are not falling in the stock market because Amazon messed up, because Google messed up, because Microsoft messed up. We are falling because of two fundamental things. And the number one reason we're falling this morning, which is why Grab, Nubank, Mercado Libre, these guys are also going to get hit this morning as well, is because of this US dollar being at the highest level since 2022. Very bad for international stocks and in general bad for US equities, because that means the 10-year potentially goes higher. The 10-year right now is at 4.776. In the morning, I think we were at we were actually at 4.8, or we were at 4.789, so basically 4.8. And that is the reason why things are falling. And I think this is very important to understand for those that are also trying to keep the credibility of the bearish thesis in mind, right? Which is, you have to, because if you're going to be a good bull, you have to understand the bear argument. The bear argument outside of recession is a lot of this macroeconomic mumbo jumbo that we talk about every single day about 10-year bonds and dollar index and what it means for inflation, interest rates. It has nothing to do so far with earnings growth. Delta crushed earnings, Jefferies crushed earnings, Costco had amazing December growth. TSMC, people forgot this headline last week, grew 58% of their revenues in December, which means TSM, which has earnings on Wednesday, they're going to crush it because they had an amazing Q4. And so I think Tom Lee's broader argument here is that you have to acknowledge the bear case, you have to acknowledge the nature of a pullback, you have to acknowledge the volatility. We had a amazing 2024 compounding at 25%. Like, we're just not going to go up forever. There's going to be pullbacks. But nonetheless, the reason to stay bullish is because tech earnings is the thesis. And if that thesis doesn't go away, and we'll find out in the next 2 weeks how bad earnings are, but if earnings are good, then maybe we actually are approaching extreme fear on the fear and greed index. So again, when you take the most amazing macro economists, Stanford PhDs, and you put them up against the fear and greed index, the fear and greed index tends to signal when things are a bit more of a bottom. If Tesla was at we're at 380 right now on Tesla, 385. If we were at 385 and we were at greed or extreme greed, you could easily say, all right, Tesla's getting ready to make a move down, because when we go from greed to fear, 385 probably becomes something like 310 or 300 or below 300. If we are at 385 and we are at fear or almost extreme fear on Tesla, I don't know if Tesla gets back to 300, because how much lower would the market have to go to get to the bottom of extreme fear? Usually when you tend to be in that range, you tend to bottom, which is consistent with Tom Lee's argument, which is that the S&P 500 at 5,700 would definitively put us in extreme fear. That's another 2% down from here. And if that's the case, that tends to be historically, when you just look at that fear and greed index, the time to buy. And that's not just for Tesla, that's for Palantir, NVIDIA. I'm just using Tesla as an example. But for all the bears that want Tesla to be below 300, NVIDIA to be below 100, Palantir to go back to 20, 30 bucks, we would need to be, in my opinion, closer to greed or extreme greed at these levels to then have the macro headwinds to push us all the way down, and for those equity prices to then correspond with that index in and of itself. It's hard to do that when you're already at extreme fear. Now, either that chart is wrong and this is an anomaly and we're not actually in extreme fear, and that we're actually in greed right now and we have a lot more to go to get to extreme fear, or if we are in extreme fear and $7 trillion on the sidelines decides to one day make its entry back into the markets, if Tesla gets to 350 or 340, then you do have some more market momentum that I think we can see. So overall, Tom Lee's argument, especially on Bitcoin as well, is that, look, we've had a really good run for the past couple of years. Things are volatile. The technicians at Fundstrat see 5,700 as key support. Will that be 5,700? We're going to see S&P 500 right here at 57.6. We are at the lowest levels we've been since Trump got elected. So theoretically, the entire gain in the S&P 500 since Trump became the nominee is gone. Which goes to show you, again, going back to this extreme fear point, if for the past 4 months we rallied, and not on individual names, but just looking at the indices, if we rallied for the past 4 months primarily based on the narrative that Trump was going to be more pro-growth, deregulation, et cetera, and all of that's gone in the past 23 days, which is really when this correction started in mid-December, then maybe that is a sign of extreme fear. What is the catalyst to take us back down to 5,000 on the S&P or 5,200? Honestly, to me, it's recession. And unless you think we're getting a recession, which that jobs report showed us that we're probably not getting a rate cut anytime soon, but it's really hard if you believe the job numbers to think we're getting a recession, then maybe that does become the bottom. So I think there's going to be deals this week if CPI is bad, and we'll talk about CPI in a second. But so far this morning, IWM down 1%, Meta down 1%. Zucks made a lot of headlines on Friday. We'll talk about that later, but TikTok probably gets banned on January 19th, which should be a tailwind for Meta. Palantir down 4.28%. Palantir is not that much of a surprise. It's at a much higher extended multiple from the rest of the market, so it kind of makes sense that's getting hit a little bit worse than some of these other names, but still Palantir holding on to the 60s. Tesla as well, trading at a 193 PE, down 2.87% at 383, still holding on to that high 350s that we're currently at. Apple, we have a headline this morning saying that their sales are probably down 5% in Q4 for holiday season, which is not good for the iPhone, but Apple right here down about 1.28%, Amazon down 0.5%, Shopify down 3%, Reddit down 4%, AMD down another 1.3%, now at 114, below the Christmas Eve low. Nvidia down 3.76%. They have some headlines on Nvidia today. We'll talk about that. That's at 130. The question becomes, how bad does this get based on the macroeconomic headwinds that we talked about? Which again, I keep saying this because these are macro headwinds. These are not company-specific headwinds. And I'll sing a different tune in the next 2 weeks if we get company-specific earnings results that show that, oh, Tesla's not growing at all, or Bank of America sucks right now, or Nvidia, it can barely grow 50% next year. But if that's not the case, then I think we're going to see some pretty strong numbers going into Q4 earnings. So having said that, this is the perception of what is happening right now in the market. Not to mention, another reason why people probably should have some clarity on why things are down right now is Trump's going to get sworn in 7 days, 8 days, and no one knows what the hell's going to happen. On day one, you've got the Trump fans that are expecting massive deregulation, massive executive orders, all this stuff that's going to be super bullish. You've got the Trump bears that are thinking, all right, so he's going to start implementing a lot of stuff that potentially is inflationary, yada, yada, and there's going to be a lot of uncertainty that happens, or that should be happening within the market, which is fair to have uncertainty because it's a brand new president and a brand new administration over the past 4 years. Do we get a Bitcoin reserve? Do we not get a Bitcoin reserve on day one? Does he start slashing regulations on oil immediately? Oil, by the way, another reason why stocks are struggling right now. So to summarize, the dollar's up, the 10-year's up, and then we instituted new sanctions on Russia over the weekend, and now oil is at its highest level in the past 5 months. We're at 77.8 on WTI, and natural gas is at 4. It was at like 2.5 just a couple months ago. So when you got oil prices going up, when you got the dollar going up, when you got the 10-year going up, it all goes to create some extreme fear. But that extreme fear, I think the nuance here is not because NVIDIA, Amazon, Microsoft can't put up good numbers. It's because of the macroeconomic headwinds that we're facing. And quite frankly, macroeconomic headwinds are okay. Like, you're supposed to have macroeconomic headwinds because then you also get macroeconomic tailwinds when those headwinds become tailwinds, aka when the dollar comes down from 109, because my belief is that Trump's not going to allow this dollar to stay this high. That's going to be a tailwind, right? And you kind of just got to go through the motions, but there are opportunities in those motions when things get as bad as they get. And again, do people really think this is bad? Like, one of the other things I've been thinking about is that this feels very normal. Like, maybe S&P 500 down below 5,500 gets a little bit more like, all right, we're getting a real dip right here. But we rallied like crazy in 2024. I feel like everyone has to have a little humility here to be like, yeah, as much as I love Robinhood, and I think it probably should be worth, by the way, they got upgraded to $60 today. We'll talk about that later. I think it should be worth like minimum 45. I can understand the stock was at $7 18 months ago. It's at 38. Like, these are things you can't complain about. Same thing with Palantir, 6 to 60 instead of 6 to 80. Nvidia went from 40, now it's at 130 instead of 153. Like, it's one of those things where earnings growth will happen for these names. And when those earnings growth numbers come in, you will have money that's going to be sitting in a money market fund saying, why are we sitting in a money market fund? Why are we sitting in a 10-year? And they're going to buy these equities, but that earnings growth needs to come in. I think we need to be patient for that. And I think that's essentially Tom Lee's argument as well in terms of what we should expect from overall earnings growth going into Q4. So that's what we got. That's what we got currently right now. Jasmine says, not bad. I'm thinking long-term. Yeah, and if you're thinking long-term, I think you should want as many dips as possible, because when you think long-term, then I would love Meta under 500. I don't think that's going to happen, but I would love that versus having to pay at 630. Now, let's talk about CPI. So CPI this morning, and then we'll get into some of the upgrades we got. Tesla did get upgraded today by one of the biggest companies, one of the biggest Wall Street firms that covers them, Morgan Stanley. So we'll talk about that as well. CPI is expected on Wednesday. I'll be live at 8:20 in the morning, 20 minutes earlier than we usually go, because that's going to be a big one. We'll get the numbers at 8:30 a.m. Eastern. And Goldman Sachs put out a report. They are expecting on CPI 2.9%. Now, I saw this last night, and I actually was pretty happy when I saw Goldman Sachs expecting 2.9%. Why? Because if everyone, and Goldman's, probably going to be consistent with everybody else, if everyone's expecting 2.9% on CPI, last month we were at 2.8%, then that means it's priced in. That means we are priced in. So Goldman is expecting headline CPI at plus 0.4% month over month, 2.9% year over year, core CPI at plus 0.25% month over month. Tom Lee also thinks if we can be at 0.25 or below, that's going to be that's not really bullish, but at least it's not, super bearish in terms of a dramatic increase of inflation. And then 3.27% year over year in terms of core. If this is the expectations for CPI, and we actually do have a 2.9% reading, and it's not a 3 handle, which, psychologically is not going to be great for the markets, I think that's priced in. And so then the question becomes, how scared should we be about CPI? Honestly, I don't think it's something to be super, super scared of. Like, could equity still fall if we get a hot CPI? Sure. If we get 2.8 or below, I think equities, they don't have to go up, but they definitely don't have to go down because that means inflation stabilizing. But I think this is going to be one of the more predictable CPIs that we get. Now, if we get 3.1, 3.2, 3.3, then we got an issue. And even if the issue is temporary, because there are elements of inflation like automotive parts and shelter that are coming down, it is still a problem, because then the narrative goes, okay, are we getting even one rate cut this year? Which Bank of America said on Friday, which I thought was a bit irresponsible for them to say this, but they said the Fed cutting cycle is done. Like, we're getting no more cuts for the rest of the year. Goldman Sachs, JP Morgan thinks like, no, we're going to get cuts. It's going to happen in July. We thought it was going to be March. So like, they're pushing back the timeline, which is a little bit more responsible. Bank of America's like, we're done. And I think that's a little bit reactionary to inflation data that we haven't even seen yet. So I think it would be nice to be under 3% on CPI. 2.8 or 2.9, given where we were, looks great. Now, for people that haven't kept up with CPI, in September, we were at 2.4. So this is why you've got the Dan Niles of the world saying that their cash position is 50%, because if we go from 2.4 to maybe 3.4, then we're not tackling inflation, right? And then, yeah, I don't think the Fed's going to hike, but they're definitely not going to cut. And so from that perspective, I think being at 2.8, 2.9 looks fine. Tom Lee and his team thinks that, we're probably going to stay in that range, given inflation is slowing down, even if it's slowing down gradually. But that's going to be one of the most important numbers on Wednesday that we look at, even though I think it is currently getting priced in right now. Sachin says, this is why I raise cash and hedge for upside move with out of the money leaps in case we enter in a runway market with any indication. If we keep dipping, I can wait for deep dips. That's another thing that I think is very important. And put your percentages in the cash right now. Let's do an update, because last time we did this was 2 weeks ago. What percentage of your portfolio is cash? I'm at 30%. I've been at 30% since January, ever since I sold the hood options. And I'm really loving being at 30% cash. And I think, one of the core things we discussed in the beginning of December, or beginning of January, end of December was, hey, we can be patient. This was a big theme for like the last 5 days of December, even when we were dipping. Let's just be patient, right? Markets are up a lot. We got a lot of unknowns with Trump. Being patient is okay, especially if you were up triple digits in 2024 and were able to take profits going into 2025. Like, it takes a level of humility to just be like, I did good in 2024. I probably got a lot of luck that was involved with that. I'm going to be patient, and I'm not going to jump at every 2 to 3% dip. Because as Stuv Lace says right there in the chat, we haven't seen real red yet. I agree. I don't think this is real red. Until Robinhood goes below 35, this is nothing to me. Like, Robinhood's kind of my proxy in terms of the market. Like, we need to really see the market get bearish. And the market will get bearish if they sell off Hood, because they think that people aren't trading anymore. They think people are, not depositing disposable income into brokerage apps. And so that to me is like a really good proxy. And somehow Hood is holding 40. I can't explain it, but maybe one of the reasons is because the market doesn't really think we're having some massive, massive cataclysmic crash anytime soon. Melanie's at 20%, Amato's at 20%, Michael Sullivan 22%, Arlie's at 50%, Kenneth at 60%. All right, so these are much higher than what I saw a couple weeks ago, which means it does seem like you guys took some profits, and that's a good thing to do. It's never a bad thing at all to take some profits and just hold on to the sidelines. And so I think that's fair. Like, all the numbers I'm seeing are almost over 20%. Colorblind's at 60%. So that means a lot of people have money to go shopping. That means a lot of people have money to go shopping. And quite frankly, I've never been in a situation in my life where I've actually had money to go shopping in the stock market. It's 2022 was bag holding, right? 2023 was recovering from the bag holding. And then 2024, you guys know my situation. I was all in, and I was just hoping it would work. It ended up working nicely. So this is the first year in my life where I'll actually have some money to go shopping if we get an opportunity. And the question is just going to be when and if we end up getting like a really, really good opportunity. So that's what I'm thinking in the context of the macro. Kenneth says I'm going to start adding more in the markets in February and March. I think that's a good idea as well. Why? Because we're going to get a ton of earnings. We're going to get a ton of earnings by the end of January, early February. And so it's going to be a lot easier at that point to then determine if NVIDIA at 130 is a great deal. Like, I think it's a decent deal right now, but is it a great deal if they put up 40 billion in revenue? Probably. The question is going to be, does NVIDIA do it? And right now the market's on their heels because they probably don't believe they can do it, or maybe they do believe they can do it, but they're just afraid to take the risk with it. And so giving this stuff some time, even though it is kind of more boring, I don't think is the worst thing in the world. Let's hear from Gabriella Santos. This is one of my favorite analysts at JP Morgan. Let's get their perspective on the markets, and then we'll get into some stocks that are getting upgrades in the pre-market.
Repricing that we've been seeing for about 5 weeks now. And I do think you're absolutely right. It's very much being driven by a shift higher in yields along the curve. But I think most importantly in 10-year yields and in specifically real yields. So I don't buy that this is all about higher inflation expectations or a reset in Fed expectations. I think it's very much driven by uncertainty in a different part of DC. So really, I think we're all bracing for a week from now, after the inauguration, the flurry of information we're going to get and how we can shape our expectations of economic forecasts and risk premium from here on out. And that, of course, reprices assets across the board.
Okay, and so what's the full reprice look like? And when's that happening?
So I do think it's already happening, right? If you look at just the S&P 500, maybe you'll miss it. It's off 4% all-time highs. But the median stock is now down about 15% from its 2024 high. So I do think there's already a bit of repricing and understanding that it's not all good, it's not all bad coming out of DC. It's going to take us a little while to figure out how it nets out for different companies and the scale, the scope, the sequencing of policy. What, of course, hasn't fully repriced is more of your mega cap tech, your more high valuation, high expectation kind of sectors. And that, of course, could drive a bigger repricing in the index overall, given it's 40% now of the index.
I know that what you do and Jamie Dimon does don't always correlate exactly, but we were commenting on this interview that he did on CBS over the weekend where he called himself cautiously pessimistic as opposed to cautiously optimistic. Do you have the same view?
I would say we're cautiously optimistic about the economic outlook. I think cyclically, really last year was a story of coming out of the cyclical storm, realizing corporate household balance sheets are doing fine. We're normalizing across a variety of indicators, the labor market, inflation. We're also cautiously optimistic about the long run outlook. Also, a big story last year was the improvement on the supply side and productivity reaching 2%. Where we're more cautiously, I wouldn't say pessimistic, but the reason for caution, we think, is much more in portfolios. There is a cost to pay of very strong but very concentrated returns, which is when we speak to investors, you know, what was a 60-40 allocation is now a 75-25 allocation. What was 50-50 growth value is now 60-40. So there's a lot of a focus on previous winners, big recency bias, and that doesn't set you up for strong returns going forward.
Maybe a curveball, maybe not.
So it's fair, right? It's fair, a little bit of rotation that their clients are seeing, kind of going 60-40 growth to value versus being the opposite on value to growth. And ultimately, you know, I don't think that's the worst thing in the world. It's kind of just hedging, protecting yourself a little bit. But in general, so far, my takeaway from all the volatility we've seen in the first 13 days of January is that none of it, absolutely none of it, is because of earnings growth. And I think it's very important to keep that in mind. And it's not because of bad job numbers. It's been the opposite. It's because of great job numbers. So it's not because of recession fears. It's not because of unemployment. It's not because of earnings. It's because of the dollar and the bond market being very wonky. And you know, that is a real thing. If you can get 5% from a 10-year yield, you've got, you know, if you don't think about, you know, the average retail investor, you talk about a professional money manager who has to guarantee returns to their clients. It's easier for them to digest not being in Amazon, but being in the 10-year. Now, you may disagree with that decision, but there's trillions of dollars out there that are willing to buy U.S. debt over take risks in U.S. companies because one is de facto guaranteed. The other one requires Amazon to have really good operating margins after they've rallied from $80 2 years ago, right? And so it's just a little bit more risk that people might not be willing to take. Now, if that 10-year comes down, it's easier to say, well, Amazon's way more attractive because we're willing to take that risk. But until that happens, it's a bit harder to get that money to rotate. back into equities. Let's check out our risk-on portfolio and see how it's doing. So these are the spec plays that we made last week. We do have some volatility in the pre-market. SoundHound down 3%, Archer down 4%, Big Bear AI. I know a lot of people have been asking about this one. This one's down 6%. Faraday Future. This stock has like some magic to it or something. This one's up 2% somehow. MicroStrategy's down 5%. Saylor did buy some more Bitcoin. We'll talk about Bitcoin in a second this morning. GameStop's down 2%. AMC's down 1%. Oklow's down 5%. Color's down 12%. QUBT, Quantum Computing, is down 10%. Rigetti is down 15%. IONQ, even though they got a deal from the Air Force this morning, which actually is kind of bullish, they're down 7%. And then D-Wave down a whopping 18.5%. So the quantum trade has been horrible since Thursday, ever since Jensen. And then Zucks on Friday said quantum is 15 years away. Jensen said he thinks it's 20 years away. Zucks did say he's not an expert on quantum, but nonetheless, when someone influential says that, you do get some volatility here. And the question is going to be if dip buyers come in to end up buying the quantum names. NVIDIA right here at 129.8, so that's below 130 right now. You're getting some really bad fear on NVIDIA, down 4.4%. We'll talk about why that's happening. It has to do with something they issued about the Biden administration today. And they basically shitted on the Biden administration. They're very much looking forward to the Trump administration based on what they said. But you do have some volatility right there in the context of NVIDIA. Now, one thing that's really good, let's transition to Bitcoin right here in crypto, is our good friend Fartcoin, which is at least similar to the quantum plays in terms of speculation, not really on the fundamentals, but in terms of what we're looking at from a spec process, is down really nicely. It's down 4% right now, and it's down basically 30% from 2 weeks ago, which is important. Why is that important? Because there is no world where Fartcoin deserves to be worth $800 million when NVIDIA is down 5% in the pre-markets, trading at its lowest level. So if you look at the price to earnings on NVIDIA and you assume a 2026 EPS growth of $4.45, NVIDIA is trading lower than it was at $90 on August 5th. Now, again, you have to assume 2026 keeps up that type of growth to be able to get that comparison. And that was at 135. Now at 129, you got NVIDIA actually trading much lower than it was at $90 on August 5th based on the growth projections. Fartcoin should not be worth $1 billion when that's the valuation on NVIDIA. That's just genuinely what I believe. This is froth that needs to come out of the market. It is not good for any of us, unless you're long Fartcoin, to have this amount of capital, even if it's only $1 billion, stuck in a useless meme asset when the meme coin trade is kind of done. The peak for that was March. If you looked at dog with hat, that thing was almost at $5. Now it's at $1.45. And still, it's a dog with a hat. Should it even be worth $1.45? Probably not. That's done. And I think it's very nice for us to take some of that money and people to put it into Bitcoin, which is probably a lot more valuable than Fartcoin, or to put it into NVIDIA. And so I think this is a good thing. I think this is a healthy thing, and I think we got a lot more downturn to go. I know a lot of people do think there's a quantum thesis, and maybe there is, but I think it's nice for Rigetti to not be trading at 17,000 times price to sales, because a lot of that money probably shouldn't be in Rigetti. It should be in Tesla or NVIDIA or Google, which is trading at 18 times 2026 earnings, right? And so I do think from some perspective, it is nice to see that we're getting a little bit of volatility in the context of these crypto names. Now, in terms of Bitcoin and some of the other things we're seeing in crypto. So here is what the crypto markets looked like right now. They bounced a little bit from here, but this is what crypto was in the pre-markets. Everything's red. So we're obviously seeing a little bit of risk off in the context of what we're seeing on the overall crypto asset class. Now, granted, we hit 90,183, which means we were $183 away from going below 90,000 this morning. And then we bounced. And part of the reason we bounced is because this guy continues to buy the dip. MicroStrategy has bought 2,530 Bitcoin at 95,972 a coin. They now hold 450,000 Bitcoin at an average of 62,691. They spent $28 billion to buy their stake, and it's currently worth $41 billion. So it's worth about $13 billion more than what they paid for it. MicroStrategy, the company, is worth $80 billion, so it's trading at basically a 1x premium against about a 1.7x premium against the amount they spent to buy Bitcoin. And this is MicroStrategy's 10th week in a row of buying Bitcoin. So when you got people like Saylor that are hammering the bid, and ETFs that continue to buy, even though last week was horrible for the ETFs, they had about, I think, $1.7 billion of outflows last week, or $1.2 billion of outflows. you do have, Bitcoin being able to maintain 90,000. And I agree with Tom Lee. The fact that Tom Lee, the fact that Bitcoin's only down 15% from the highs is not a bad thing, given how volatile the asset class is. 90,765 currently right now. All right, so here's a question. How many people think Bitcoin goes below 90,000 this week? Do you think Bitcoin goes below 90,000 this week? It feels like it can happen, but then again, Bitcoin has been known to rebound very easily when people don't expect it to see it happening. If that does happening, then we got to keep an eye on the Bitcoin proxies, which let's look at right now in the pre-market. All of them are down. Robinhood down about 4%, Bitfarms down 4%, MSTR down 5%, which means all the MSTXs, MSTUs, all the derivative proxies of that are down. Marathon's down 5%, Marathon getting crushed right here below 17. CleanSpark down 5.8%, Coinbase down 4%. I mean, all these names, if Bitcoin does go below 90 and we head into the 80s, they're going to get hit. And I think that's okay. I think that's normal, but it's one of those things that if anyone's in these names, you definitely have to keep an eye out for, especially with the broader market getting hit currently right now. It was below 90K this morning already, was it? Bitcoin? No, I got 90.1 as my bottom. Different exchanges might have different bottoms though, because it moves differently across the world, but 90.1 was my bottom. I think below 90 is psychological, and it's hard. It's hard to get into some of those psychological ranges, even on the downside, until you really get a dip. And so far, we are not seeing that. The Max 7 right now, we got 2 minutes until the market opens. Apple is down 1.5%. There was a report that we'll talk about in a little bit that says their December sales for the iPhone are down 5% year over year, which shouldn't be happening if Apple Intelligence and the holidays are at prime time to buy. So that's not good. And that's why Apple is down $8 billion in market cap in the pre-markets. Microsoft down about 1%. Meta's down 1.52%. Google's down 1%. Amazon's down 0.5%. Nvidia getting hit the worst, down 4.3%. And then Tesla down 2.9% as we get into the market open. So look, we got about 30 seconds. Today's going to be very important. The reason today's going to be very important is not only because we fixed the bell, but also because every day in January, people have bought the dip. I know it doesn't seem like it, but if you actually look at the charts, money comes in around 1 p.m., 2 p.m., people step in, which has stopped some names from absolutely collapsing. Today, we see if that collapsing starts to happen, if it really does take place, or if people step in to buy the dip. Again, like they've been doing for the past 2 weeks so far. So I think that's going to be the story of the day. We got a lot of other headlines to look at after the bell, but I think that's what everyone has to keep an eye on going into the second week of trading for 2025. All right, here we go, folks. Monday, January 13th, 9:30 a.m. The stock market is now officially open. All right, let's get into it. Tesla opens the day down 2.8%, 383.74 on Tesla. Bitcoin, 90,795. Bitcoin down about 4%. American Airlines, which was up 7% last week, now that's down 2.77%. They were up off Delta's good earnings, which Delta obviously had a really good earnings based on their Q1 guidance. PayPal down 1.7%. Opendoor down 5.78%. SoFi down 3.3%. SoFi has been taking it on the chin. They have earnings coming up on January 29th. So we'll see what happens with SoFi. But SoFi right here down 3.32%. S&P 500, 575, they're down about 1%. Snapchat's down 2.25%. They might be a little bit of a recovery play if we have TikTok actually getting banned. Snapchat, Google, and Facebook, Meta, are the stocks on January 19th you want to look at if TikTok does get banned. United Airlines is down 3%. Teladoc's down 1.6%. Amazon is down about 0.5%. Meta is down 2%. Meta potentially going below 600. So the Max 7 getting a little bit of a hit. Netflix at 833. Netflix was almost 1,000 2 weeks ago. Netflix now at 833. That's down about 0.45%. Square, which has been my least favorite name in the crypto proxies, this one is down 2.33% as well. It was at almost 89 last week. Roku's down 2.52%. DraftKings is down 1%. Roblox is down 2.64%. Tesla 381. Tesla now down 3.2%. Where is Palantir? Palantir 64.78. Nice rebound. Palantir was at 63.40 in the pre-markets. So we do have Palantir going not green yet, but it's at 65, which is better than being below 64. Where is Nvidia? As we look at Nvidia in the pre-markets, it was struggling. It was at 129. Now it's at 130.8, basically 131. So Nvidia is still down 3.2%, but Nvidia is currently down. MSTR, oh boy, that's down That is down. MSTR 305 down 6.8%, potentially going below 300. We'll see how that one holds up. Broadcom surprisingly is up. Broadcom actually holding green. Broadcom not too bad. AMD is up. Oh, that's a good sign. That's a good sign. And the reason I say that's a good sign is because AMD has been so beat up in the past month, particularly in the past 2 weeks. You want to see buyers step in on a name like that. I mean, like, forget the thesis of AMD. If, you know, just even from a technical perspective, you want buyers to be like, all right, enough is enough. Let's step in. This is a good company, and you know, it doesn't deserve to be at these levels. So AMD getting a little bit of green right here. Again, it's a very little bit of green, but it is getting some love right now. Berkshire Hathaway is up. That's a little bit more value oriented. So maybe some rotation going from growth to value. Shopify's down 3%. Reddit is down 4%. Reddit was almost at 190 2 weeks ago. So you're now down at 160 on Reddit. Hood holding on to 38.99 right now, 39.04, down about 2.64%. Hood did get upgraded this morning. The upgrades are from JMP. They went from 53 to 60. And Barclays, they went from 49 to 54. So Robinhood did get 2 upgrades this morning. I think JMP is matching Mizuho with the highest target on the street for Robinhood. Google right here down 1.62% below the 190 level. Grab is actually holding on to not too bad. I thought it would be down like 3 to 4% because of the high dollar, but that one's down about 1%. Lowe's is down, Home Depot's down, Walmart's down 1%, Target's down 1%. Nubank's actually getting hit because of that high dollar. That one is down 1.69%. Rumble's down 1%. Nike's green. Got a little bit of green on Nike. And then TLT slightly going green. The 10-year currently is up. TLT is up slightly, with the 10-year below 4.8 at 4.778. SMCI, yeah, let's look at the semis. SMCI is down 9%. Whoa. Why is SMCI down 9%? Does anyone know? Broadcom's the only green. All the semis are down, but none of them are down 9%. Dell is down 5%. Oh, Dell's getting hit back. Oh, Dell and Micron. Holy crap. Micron just got upgraded today by Goldman Sachs to 125. So that is kind of weird, getting us down 6%. There has to be some news on Micron and Dell. Well, if Dell is down and SMCI is down, that means the server infrastructure for GPU space is down. I would imagine HPE is down, right? Yeah, they're down 3% as well. There you go. So the server derivatives of NVIDIA, aka SMCI, Dell, and HP are all down. Bitcoin's below 90. Are we there yet? Oh my God, we're there. There we go. Wow, there we go. Just like that, below 90. Look at that candle. Wow. MicroStrategy still holding 306, even with Bitcoin going below. Now maybe that's a small wick, and maybe it comes back up, or maybe we're heading down. Maybe Oracle's down big too. Well, so the reason Oracle's down, I was wondering why was Oracle down, and I figured it out. I think I figured it out. Oracle has a big contract with TikTok. They control all the U.S. servers for TikTok, and it's been like that since 2020, or since the beginning of 2021. So if TikTok goes away, I would imagine they lose some money, and that's probably not the best thing for Oracle. So that was actually down 5% on Friday when the Supreme Court case was going on. So I think that's why Oracle is down. Meta right here at 600. Tesla 385. Tesla getting a little bit of a green candle from 380, holding on to 385. BITX, that's down 10.4%. Apple's down 2%. Every move in Apple is a $30 billion of market cap going down. So Apple just lost $30 billion in market cap right here. So Apple right here is down. Reddit is 160. That's down 5%. And then SMCI getting really hit badly, down 9%. Let's look at the spec names and let's look at Quantum. How are they doing as we open the market? Oh my God, that's bad. That's really bad. IONQ is the only one going green because they got a contract this morning. Rigetti's down 8%. D-Wave's down 16%. QUBT is down 6%. Faraday Future somehow is up 5%. Archer's down 4%. SoundHound's down 5%. GameStop, AMC are down 3% as well. Oh boy. Oh boy, boy. Bitcoin's at 88. There's no way we hit 88 that quick. No, we're not at 88 yet, bro. Oh, we were close though. We were at 89,189. Dude, we were $200 away from Bitcoin being at 88,000. Holy crap. Fubo's down 10%. Okay, that makes sense to me because Fubo was up 300% last week. I mean, like you probably was going to take a breather. Palantir at 65. I mean, look, the fact that we're even holding 65 on Palantir to me is bullish. 62, 65, just holding this high multiple, which again, it is a high multiple, I still think is okay. S&P is recovering a little bit. I mean, it's still down, but it's not going lower than the levels it was at in the pre-market. And even Tesla being a champ at 386. I mean, that's not bad, dude. We were there a couple weeks ago. It's not like these prices are unheard of. We saw them just 3-4 weeks ago. So it's not that insane. Amid, is this bloodbath justified? Yes. Well, first of all, again, I don't think it's a bloodbath. I think we have to totally rechange our narrative here. The S&P being down, what was it, from the absolute top? We were at what, 601 minus 575. That is, 4.5%. That can't be a bloodbath. There's just no world in which that's the definition of a bloodbath. So I don't think it's a bloodbath, but is it justified? Yeah, because the dollar's up and the 10-year's up. And once that comes down, which hopefully Don E.T. is going to be able to help us with that, SMCI now down 10%. Yeah, you're going to have more risk off on equities, which is also okay. It's okay for quantum names to not be trading at a 17,000 times price to sales. By the way, Rigetti is still up 800% in the past 3 months, even though it's down 60%. So it's like there might be some more downside to go on these names to get the froth out. Or maybe there's dip buyers, right? We're going to see. But I think all of this is relatively justified from a macro perspective. But the reason it's not a reason to be bearish, which is what I started off the show with, it's not because of earnings. And until we get actually bad earnings, I don't know how anyone could meaningfully say a U.S. Treasury bond is going to be better than Google this year. Because Google is going to print probably $100 billion of net income. And like, I'd rather buy something that's doing $100 billion of net income than buy the U.S. debt at 4.7%. Do you think IONQ is frothy? Well, look, I know nothing about the company, but this thing was $8 in September. So just by the pure nature of its run up, again, I know nothing about it. One could argue that it is frothy, right? And there's lack of earnings growth there because, there's not too much earnings to judge off. But regardless, I think quantum as a sector has definitely got a lot of froth in it. And if it comes down, it comes down. If it doesn't come down, then the people that own quantum continue to, stomach through that dip. The question is just going to be, where does that money rotate? That's what I'm more interested in. If you sell your D-Wave, do you put it into NVIDIA? And does that help the broader market in terms of, is that the rotation? All these CNBC analysts have been saying, well, the rotation is going to be from NVIDIA to small caps. Like, what are the rotations from all the spec stuff back to NVIDIA, where it should be, or Amazon, versus continuing to stay in spec? And I think over the next few months, we're going to see Bitcoin, a nice rebound to 90,300. So you got it looks like the definition of a wick all the way to 89,189. It lasted for about 2 minutes. And then we're back here to 90,197. It even looks like a wick on the chart, which is not too bad. Oh, mRNA. So Moderna also got hit, guys. So Moderna badly hit, down 23%. Honestly, if you hedged your portfolio with Moderna puts and quantum puts this morning, or sorry, not this morning, but beginning of January, so like bearish pharmaceuticals and then bearish super risk on plays, it would have been a decent hedge. I know we're doing Monday morning quarterback here, but like, dude, being hedged with pharma and quantum, it would have just been like not a bad hedge going into January. I did not do that hedge, but if you did, it has worked out. So Moderna said right here, they cut their sales forecast for 2025 on slow demand for COVID and RSV shots, aka people are not getting COVID shots as much anymore, which, COVID is a cut from a couple years in the past, so it probably makes sense that there's not that much demand. They now expect revenue between 1.5 to 2.5 billion, and down from 2.5 to 3.5 billion. So when you take off $1 billion in revenue, I mean, yeah, that's going to get you hit. Let's look at some of the other pharma names. J&J, they're buying a company today. They're up 1.2%, so that's helping them. Pfizer, which is trading at decade lows. Pfizer is down 1.2%. We have Pfizer, Moderna. What are some other pharmaceutical names? Pfizer, Moderna, J&J. I should have a watch list for this already. I feel like I should have a watch list for this already. Oh, yeah, I do. Novartis, that's down a little bit. Eli Lilly's down 1%. Teladoc's down 5%. Hims is down about 1%, nothing too crazy. AbbVie is down 0.22. So Moderna's the big one getting hit. And so it looks like Moderna's guidance is not necessarily translating to some of the other pharma stocks, but Moderna themselves are definitely getting hit. Yeah, Novo, Lilly, et cetera, they're all down about 1%, but not down 23% like Moderna is. I mean, that's That's tough. Because look, when you take off $1 billion of guidance, where are you going to get that $1 billion from? Where are you going to get it from? What, you're going to come up with some new drug and tell people they have to take it? Like, if you don't do that, it's just going to be a bloodbath, at least for the coming future, until they find some reason for people to buy new drugs. And right now, we don't have some crazy global pandemic to be the catalyst for that. SMCI is down 10%. I'm still trying to figure out the headline on SMCI. Kohler's also getting hit. Kohler, by the way, I think they bought some more Bitcoin recently. Also, Semler Scientific bought more Bitcoin. Oh my, Kohler's down 21%. Holy crap. Holy crap. Not sure why that one's down 21%. Bitcoin's not down that much to take it down 21%. But Kohler is another name, guys. If you guys remember, this thing was like 5 cents or something. Kohler is still up 900% after falling from 480, where it topped out at on December 26th, to currently 188. This is what I'm saying, bro. This froth has to leave. I like if you're in this name and you've made money, congratulations. I'm happy for you, but it's not healthy for the market to have this type of froth. It's just not. Like this is not good to see. This is all BS. It needs to leave, and that money needs to go into shit that actually matters. And I think sometimes, people need a humbling. I've been humbled many times in the past before. I'm no stranger to being humbled from stuff like this. But if you print that much money and we have such a good year in 2024 where everyone's up triple digits, which is amazing, and then you get all these spec plays gaining this much momentum, some of it needs to get wiped out. And that is healthy. That is okay. AMD still going red. NVIDIA down 3.79. Palantir still holding 65. MSTR at 312. That's recovering a little bit as Bitcoin right back to 91. Now it really looks like 89 was a wick as we're right back to 91. But we still are down on Bitcoin for the day. Derek, good morning to you. That's a very thoughtful vocabulary you used to wish everyone good morning. But good morning to Mr. Oh, he gave 50 gifted? I didn't even see that. Derek, thank you for the 50 gifted. I didn't even see that. Thank you, brother. 50 of you guys just got gifted memberships courtesy of a friend of the channel, Mr. Derek Wall. Thank you, Derek, for the 50 gifted. Matthew, thank you for becoming a new channel member as well. And thank you, Derek, for the 50 gifted. You guys don't get anything if you get a gifted membership. For those that are new here, it's just $5 a month to support the channel, but you don't have to get a membership. And if you got one just now, then Derek bought you a membership for a month. Okay, MSTR 314, Amazon 217, S&P 576. S&P even getting a little bit of green right here. It was down 0.89%. Now it's down 0.64%. Again, my big thing today, and we'll talk about it on the market close to see how it ends out. Every day in January, the dip has been bought, even if we haven't ended green on the day. We haven't had a sustained downward momentum leading to like some really, really hardcore declines on certain asset prices outside of quantum. And either today's going to be the same. Netflix just went green. Take a look at that. Or we actually go red by power hour at 3 p.m. But we're going to have to see later today. Tesla holding on nicely at 386, not doing too bad. Meta right there at 603, Apple at 231, Apple recovering just a little bit. Reddit at 162. IAK, which is the insurance ETF, is actually up a little bit. The California insurance losses are estimated now to be $165 billion, which is also going to be inflationary. Because imagine someone who's super rich leaves from the Pacific Palisades and they go to Miami, or they go to New York, or they go to LA and they start buying property there. Or not LA, but like the Bay Area. You have asset prices that probably inflate as money leaves from one sector to another. So we are going to see the impacts of that over the next couple of years, probably over the next decade, to be honest, when it comes to the LA fires. HIMS is green as well. Wow, dude. See, even HIMS is not a spec play in my opinion, but it's definitely a little bit more risk on. And the reason I don't say they're spec is because A, they're a real company, they have real products, and their growth is phenomenal. I think they're growing like 70% year over year. So this is not speculative at all to me, but it is volatile. And the fact that HIMS is going green right here already shows some momentum. Where's Hood? Yeah, Hood's still holding 39. It's not bad. Not bad at all. Walgreens is down 5%. Uber just went green. See, this is money coming in. Uber's been, beat up over the past couple weeks. Uber deserves to catch a little bit of a bid, even in the midst of some of this volatility. Walgreens had a good earnings, but again, I've always been skeptical if Walgreens can hold on to any pump. They had a pump 2 months ago when they almost got bought out. They went up 20%. They came right back down. They were up 30% on Friday off of good earnings, but the structural problems of Walgreens don't look like they're going anywhere. So that one now giving back some of its gains, down about 6%. Yeah, HIMS is green. SMCI, again, does anyone have a headline on SMCI yet? down 9%. Let me check real quick. There has to be some headline in the GPU server space. Or maybe it's the NVIDIA headline this morning that's causing this. No, it's the NVIDIA headline. All right, so let's talk about the NVIDIA headline. What is the NVIDIA headline? Well, NVIDIA tweeted something today. They had a long tweet. And they basically said Biden's messing up everything. So let's just read this real quick because it'll give a context to everyone who's wondering why semis are down. So NVIDIA wrote, for decades, leadership in computing and software ecosystems has been a cornerstone of American strength and influence. The federal government has widely refrained from dictating the design, marketing, and sale of mainstream computers. The first Trump administration laid the foundation for America's current strength and success in AI, fostering an environment where U.S. industry could compete and win on merit without compromising national security. Today, companies, startups, and universities around the world are tapping mainstream AI to advance healthcare, agriculture, and manufacturing. Now, this is where it gets juicy. In its last days in office, the Biden administration seeks to undermine America's leadership with 200-page regulatory morass drafted in secret and without proper legislative review. This sweeping overreach would impose bureaucratic control over how America's leading semiconductors, computer systems, and even software are designed and marketed globally. And by attempting to rig market outcomes and stifle competition, the lifeblood of innovation, the Biden administration's new rule threatens to squander America's hard-won technological advantage. What a statement to say. What a statement to say on the last days of Biden's presidency. Notice the nuance here. The first paragraph was like, in 2017, Trump laid the foundation for blah, 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 blah. In 2024, last thing you say to the outgoing administration, you guys just screwed us with a 200-page regulatory bureaucratic filing that you put out. And we really hope you guys leave super soon and hope Trump reverses this ASAP. That's basically what I'm reading from NVIDIA. And so NVIDIA is down 4%. Now, this might be a reason to buy the NVIDIA dip if you're super bullish NVIDIA, because if it's only down because of Biden's 200 pages and Trump's going to tear up those 200 pages as soon as he gets into office on January 20th, then maybe these 200 pages don't matter. But the fact that NVIDIA might know that that's going to happen and they still put out this statement just to show their disgust with these regulatory hurdles shows you how much they're at least looking forward to maybe a little bit of less red tape. There's still going to be red tape because you've got NVIDIA, semiconductors, AI, and you want to remain competitive with China, but maybe a little bit less than what the Biden administration is putting out right now. So I think that's kind of the reason why I don't see any other headlines. I think that's why NVIDIA is down. Did you speed up, or is that normal speed talking? That is normal speed for for those that have been on the channel for a while. That is normal. I did debate in high school, so that's how I'm able to talk too fast. It's clear though, right? I always pride myself if it's fast and clear. As long as it's clear, that's good. If it's fast and you can't like really understand it, then it's bad. But if it's clear, then I'm happy that we get through it fast. Bitcoin 91.5, getting some love. Palantir 65, MSTR 317, nice rebound. 303 to 317 on MSTR. 303 to 317 on MSTR. Robin at 39.18. Whereas Tesla at 386. Rivian's down 3%, Accenture's down 1%, Enphase down 3%, Upstart down 2%, and then where's SoFi? Did we get a little rebound there? SoFi is only down 2%. SoFi is very close to 14 after being at 1350. Amit, you would make an excellent CX debater. I actually did LD. I only did, for those that don't know, CX is policy debate. It's the acronym is CX. But I did CX in one tournament in my senior year, and I won top speaker at the tournament. But I'm an LD kid. I did Lincoln Douglas for the majority of my career. But the one tournament I went to my senior year, all the policy kids were mad at me because they're like, who is this LD kid who's winning first speaker at the tournament? We got to semifinals, then we lost on a 2-1. But yeah, CX, they talk a lot faster than LD. Wow, HIMS is up 2.7%, dude. Holy crap. Kohler's down 16%. Are we getting any rebound in quantum? No, it's not getting better, folks. It's not, you're seeing a rebound in Bitcoin. QUBT is down 12%. D-Wave is down 21%. It was down 18% at 9:30, so it's down another 3%. IONQ is down 3%. Rigetti's down 14%. And Google down about 1.5% currently right now. Why is SLB green? Oh, that's nice. SLB is green. Cool. Schlumberger. Well, they have earnings on Friday. And again, they're directed by oil, but they're more servicing infrastructure versus like ExxonMobil. So is oil and gas green though? Hold on, because we have oil prices that are up. Maybe they are green. Yeah, green across the board. Never mind. That's another reason why Schlumberger is up. It's just everything's green across the board in oil. So Phillips 66, Devon, Enbridge, BP, Chevron, Shell, Oxy. Oxy's back to 52. Buffett bought a ton of them at 48. I think he bought like $70 million worth of it at 48 last week. So Buffett's up on that, although he's still bag holding from 2024. And then Exxon's up 1.5%. So all of oil getting some momentum as well. I sold my Regretti at 14. Congrats, dude. I mean, anyone who got out at the top or close to the top, it's better than holding it at 7 if you got it at 14. Again, you know, I think quantum is a thing. I just don't know when it's going to happen. And the problem is, even if you believe it's a thing, again, a lot of money came in, probably from people who got cocky and felt that if, you know, they had a big year, they can then bet on things that are a bit more speculative, which is okay. It happens, right? It happens all the time, but that doesn't mean those things last. And I you know, for Getty to go back to 18, it would have to go up more than 2x now. I don't know if the sentiment is ready for Rigetti to just go back to, I mean, it's not like they could have a blowout quarter where you have this massive, massive crazy growth, maybe. But if that doesn't happen, which again, for the quantum names that are a bit more speculative, it's just hard to see that happening anytime soon. You just got bag holders there. And it's okay, but I think we get rid of some of that froth, which is a relatively good thing. Here's futures pricing on Fed probabilities. We are not going to get a rate cut based on what the futures are saying until the end of the year, and we're only going to get one if we get it at the end of the year. I think this will end up being wrong long term this year. I think we're going to get more rate cuts, but right now, Fed fund futures are definitely saying we're not going to get a cut. Now, by the way, the 10-year right here going flat, this is what you want to see to get a good deal, because this happened in 2024. Remember, we were supposed to get 6 rate cuts in March in 2024. Somehow that was a realistic expectation. And then we didn't get any rate cuts until September, yet the market kept going up because we kept lowering the expectations, which was good, but delaying the timeline, and that created some amazing opportunities. If that happens again in 2025, with the caveat that earnings growth is strong, it's going to be like a coiled spring that eventually bursts. It's just going to take some time for it to burst. And that's okay, because in that time will be opportunities to buy really good companies at really great prices, which is basically what happened from January to, let's say, July of 2024. Then things got overheated. August carry-in trade. You got the opportunity again for like 2 days in August. And then from September, we rallied forward. If that playbook repeats itself, Robinhood, wow, $39.50, trying to get back to $40, then, you know, maybe it's not, maybe we're not going to be in the worst situation. We just got to see if that playbook repeats itself. S&P recovering as well, 577. It was at 575. The Q's NASDAQ is at 502. It bottomed at 499 at 945. 10 minutes later, we're at 502, which is not too bad. Uber's up 1.5. Hims is up 2.7. Johnson & Johnson's up 0.5%. Bitcoin back to 92. Wow. 89 to 92 in basically 10 minutes. Not bad at all for Bitcoin. Yeah, dip and rip. Exactly. That was a dip and rip. Broadcom's up 2%. I don't know why that's happening, but that's one of the only semis that's up right now. Is SMCI still down? SMCI still down. Now, the SMCI dip seems kind of stupid, though, because if the NVIDIA dip is only because of the Biden 200-page regulation thing they put out, and that's probably, you know, going to get reversed, then why is SMCI down? If it's following NVIDIA, if it's not SMCI specific and it's following NVIDIA, then I feel like that's just algos, to be honest. I mean, that's the same for all the semis. If all the semis are down because of the Biden 200-page regulatory whatever thing he put out this morning, and Trump's going to get rid of that, then I don't know. It definitely feels a little bit more like a bear trap kind of, right? Versus something legit. NVIDIA now recovering 132 is at 129 now. NVIDIA currently right here at 132. Amit, there was an article from The Information. Let me see The Information, NVIDIA. What's their headline? What's NVIDIA's headline? Oh, here we go. Okay, so yeah, I guess this is the headline. This probably is the reason. So here's a headline from The Information. NVIDIA faces delays as Blackwell racks reportedly overheat and experience connection glitches, per The Information. Additionally, major customers including Microsoft, AWS, Google, and Meta have cut some orders and may have wait for updated versions later this year. That's actually a real headline. That's a real headline. NVIDIA projected Blackwell revenue of several $billions in the January quarter, with 2025 data center revenue potentially hitting up to $150 billion. this year, up from 47 billion in 2025. Okay, so basically the information, which is, it tends to be a more well-respected source in technology. They're saying, this is the big part, the Blackwell glitches is whatever, but Microsoft, AWS, and Google have cut orders. If their sources are right on that, maybe that could explain some of the volatility on NVIDIA. Now, granted, read the third line right here, right? NVIDIA is expected to do 150 billion in revenue, up from 47 billion. So that's a 300% increase in data center revenue in 2025 from 2024, which is amazing. But if the market's expecting 325% or whatever, and Microsoft, AWS, and Google are cutting orders, that could be one of the reasons why we're seeing some volatility. Then again, dude, I don't know. I mean, every time you get one of these headlines with NVIDIA, they just come back on earnings and they tell everyone, yeah, things are going great. Everyone's buying our chips. We have some delays here and there, but that's a supply problem, not a demand problem, which I would love NVIDIA to always have supply issues versus demand issues, because that means that you can fix a supply issue. A demand issue is hard to fix, because then it means, you know, there's underlying paradigmatic changes that are happening in the economy in regards to NVIDIA's technology. If demand is strong, I mean, supply bottlenecks are temporary dips, because usually they end up getting fixed. Tesla trying to make its way back to 390, Amazon at 218, Google at 190, Meta at 606, Microsoft at 415. Let's talk about Tesla. So, two things on Tesla. Number one, I had my first ride of FSD 13 this week. Yesterday, or on Saturday. I went to Jersey City, 40 minutes FSD. I was surprised beyond imagination. I had zero interventions, and I mean, I wrote a long post on Twitter. If you can read it if you're interested. But my thing was just, it was the most amazing experience of my life, because it was real world AI driving me on the complex highways of New Jersey, going into Jersey City, which is not like New York City, but it's still pretty crowded. There's still some congestion there, even though there's not a congestion tax. And it handled it perfectly. Perfectly. I mean, when I mean perfectly, I mean there were moments where I was like, dude, is it going to figure this out? And it figured it out better than I would have figured it out. Having said that, this is why Morgan Stanley analyst Adam Jonas, which if you're in Tesla, you probably know this analyst, he is raising his price target from 400 to 430. Here's what he says. As interest in autonomous vehicles continues to rise, we have conducted the most extensive re-architecture and expansion of our Tesla mobility model since its initial publication in 2015. So 10 years later, they are really revamping their inputs and outputs in the model. While autos remain important, we view embodied AI as the key driver for upside, reflected in our revised $800 bull case. We reiterate Tesla as a top pick. Investors increasingly recognize the relevance of embodied AI in a competitive and complex geopolitical landscape. Tesla's recent share price appreciation reflects its expanding leadership in physical AI, leveraging natural advantages in data collection, robotics, energy storage, AI compute, manufacturing, and infrastructure. These advantages are further enhanced by synergies across Elon Musk's companies such as SpaceX and xAI. We see 2025 as a year where Tesla's unique skill set could be further reflected in its valuation despite well-known challenges. Looking ahead, we expect Tesla's TAM to expand into broader domains, many of which are still not reflected in the current financial models that we have. So you got Morgan Stanley basically saying, hey, we can't deny this anymore, and we thought we were bullish at 400, and we're still going to be conservative, and we're not going to get crazy and put a $500 price target, but Tesla at 430 is not crazy to us because we believe the autonomy story is real. We have Tesla earnings coming up in a couple weeks, January 27th or January 29th. Tesla, Microsoft, Meta, and JPow speak on the same day. That day is going to be crazy. I think I'm going to be streaming for like 10 hours that day. It's going to be insane. But again, Morgan Stanley is just another firm of the like 15 firms in the past month and a half that have upgraded Tesla well into the 400s because the autonomy story is real. And based on what I experienced over the weekend, again, there's not enough words for me to describe how impressed I was. How much I think $8,000 for FSD is a steal, given the productivity I think it increases just on the ability to have the freedom to think and not worry about actually driving, because it's a freaking computer that's trained on all the data in the world, 75 billion miles of FSD. It knows every single area when it comes to Google Maps and navigating highways and turnpikes, and it is always going to be better than me. There's no way I'm ever going to be better than the robot. And when it goes to a stop sign, it's actually going to stop. I'm going to pretend to stop and hope there's no cops around and keep going forward. The robot's actually going to stop, which means it's always going to be safer. I mean, it's just incredible. I mean, there were two situations over the weekend when I was driving Tesla FSD. There was one where it was a yellow light approaching red, and the Tesla actually stopped, and it was the right situation because we were too close to potentially like running through the red light. And there was another situation where it was yellow turning red, where the Tesla did run through the red light, but it's a normal human would have run through that red light as well because you catch the very tail end of the red light. I mean, for it to act like a human in both of those situations, just incredible. And I can't say enough about it. So I think that's the thesis on Tesla, and I think that's why a lot of these Wall Street firms are getting very, very, very excited right now. Rocket Lab, let's take a look at that. Where is Rocket Lab? Rocket Lab 2511, they're down 6%. Okay, so Bezos was gonna launch something with Blue Origin at 1250 last night, and apparently he's not doing that anymore. The launch got scrapped. I think that's why Rocket Lab's down 6%, because the Blue Origin launch failed, or it didn't end up launching. So that's why Rocket Lab's down, I think. That's the main headline I have. SoFi almost back to 14, 2 cents away, but it looks like that's why Rocket Lab is down 6.65%. Do you trust FSD with your life? Yes, I do. And let me tell you guys a quick story. My mom has hated FSD. She's hated the concept of driving. She's getting like really nervous about, she's reading these articles about people dying in car crashes every day. So every time I go drive, she tells me to be safe. She didn't like that I went to Jersey City on FSD. So she hated it because she thinks that, the robot's going to kill me or something. My mom finally, I peer pressured her Sunday morning to drive with me to Dunkin' Donuts, 15-minute drive from my house in FSD. My mom gets in the car. Within 30 seconds, she starts taking videos. Like, she was freaking out for 30 seconds. After 30 seconds, she came back and she was like, that was amazing. That's great. Like, it felt safe. It felt like you could trust this thing. I would trust it way more than I would trust an Uber driver, quite frankly. That's how good version 13 is. By the way, we just got to extreme fear. It got to the point where my mom came home. You guys know my dad needs a new car because he crashed the Honda CR-V when I was in India. And my mom's been scared of him getting a Tesla because it's new technology and my dad's older. My mom's like, no, we need to get your dad a Tesla. And I'm like, why? And she was like, because it's just going to drive him. It's better than him driving because my dad's, getting older and he's not the best driver. So it's like she trusts the Tesla after a 15-minute drive. I've at least had this thing for like at least 7 or 8 drives. My mom had a 15-minute drive and she's like, yeah, your dad needs to buy a Tesla. Insane, bro. Insane. And that's why I think V13 is that exciting right now. My mom is the same with flights and crashes. Yeah, dude. My mom's getting a lot of headlines just come through her Facebook feed about like people dying. Also, she works at a certain place and one of her coworkers was in a really bad car crash. And so, and then my dad got into a car crash in October. So she's just getting scared and justifiably. But nonetheless, with FSD, it feels like you should have less fear because the thing is better than any robot you could imagine. Or any human you could imagine. DJT is up 8%. Wow. So I guess people are buying this thing before inauguration? Huh. DJT is up 8%. SMCI recovering, Tesla back to 390, the Q's at 502, Broadcom at 228, SoFi back to 14. Wow, are we getting a recovery? Robinhood almost back to 40. Are we getting a recovery, folks? Bitcoin at 91.8, Oracle recovering a little bit, AMD's kind of flat, Palantir above 65, and MSTR back to 320. Not bad. Not bad at all. FSD is better than your 70-something parents. 100%, dude. 100,000%. I mean, dude, it's getting to the point where, like, every day my dad drives, I'm thinking, like, this is a wasted day for us to, like, not have a Tesla. Because my dad's getting older, dude. And, like, in general, his mind races so much. I have the same problem with me, right? My mind's constantly racing. His mind is racing as well. But, my mind racing talking to a camera is a little bit different than his mind racing driving an hour every single day. So I think we need to get a Tesla as soon as possible with V13. I really do think it's going to make him safer. And in general, he needs a new car. And so I think it wouldn't be the worst thing. But it's definitely going to drive better than him. That I know for a fact. It is absolutely going to drive better than him. Wow, Rigetti's down 20%, dude. Quantum not catching a bid at all on the rebound. D-Wave is down 27%. That was down 18% at 930. So talk about another 9% down. IONQ is down 8%. Quantum computing is down 17%. I think this was down 13% at 930. And Rigetti, which was at $8 or $7.95 at 930, is now at $7.08. Oof is right. Oof is right. That one's down. All right, who's buying the dip? Who's buying the dip? Or who's buying the pseudo recovery on the dip? What are you guys doing? What are you guys doing? Here's what I'm going to do. I'm going to get this over with. I've been meaning to do this for a while. I'm just going to do it right now. We're going to start. We're buying 10 shares of Tesla. We're doing it right now. Probably buying it higher than it needs to be. I don't care. At this point, we got to start the position and just get into the phase of being okay with it. It's nothing crazy. We're not going to buy 100 shares or 50 shares. We're doing 10 shares, $4,000. and just get the process started. I said I wanted to start a position. It's time to start it. And if it tanks on earnings, we'll buy some more. So there we go. Boom, baby. We're in. 391 on Tessie. 10 shares. We are officially in. Officially in. Probably buying it higher than it needs to be. But that's the whole point of DCA. I mean, look, at the end of the day with DCA, if you think you can time it exactly perfectly, then you don't really know what you're doing when it comes to DCA. Because DCA is you DCA. You kind of don't give a fuck about the price. You just do it. You want to own more of it. And eventually you'll average down. So there we go. 10 shares of Tesla. We're in it. Do I think Tesla's going to be lower than 390 on earnings? If earnings sucks, yeah. Do I think Tesla could also be 420 by earnings if they have a great earnings and the 10-year comes down, the dollar comes down? Yeah, I think it can get back up to 400, especially with all these analysts really not being bearish on Tesla at all. I mean, Stifel raised it to 492 after they missed deliveries by 10,000. So it is what it is. It is what it is. Let's get the party started on Tesla and let's begin the DCA. I also have puts at 375, so if it really does tank, then we'll... Here's the thing. My plan on Tesla is if it really tanks on it, let's say like it's bad, like 350, 340, I'm going to roll my puts, I'll collect more premium, and then I'll buy the shares outright. Because there's no point in buying the shares at 375 on my put if I can roll it and buy the shares. And then the premiums are great, right? So there's always liquidity to roll and find different opportunities, even if you have to extend it a couple months. But if we stay in that 385, 375 range, then I think that's not horrible as well after earnings. So if it really tanks, I'll roll my put, I'll buy shares. If it doesn't tank, then, then we just get to keep DCAing and eventually we'll sell covered calls against the shares that I buy. SoFi's over 14. SoFi is back above 14. Okay, not bad. SoFi is back above 14. SoFi 13.99, basically back above 14. SMCI recovering a little bit. Walgreens still down 5%. Uber's at 66. Where's Grab? Are we getting hit on Grab? Grab's at 444. Grab still down about 1% from that high dollar. What else? Elon told me Tesla's going down this year. Elon did retweet my post over the weekend, so it's he took a little bit of a break from talking about politics, and it's so funny if you go through his feed, it's like politics. Retweet. Tesla FSD 13 was one of the best experiences I've had. Politics. It was like the one retweet about Tesla in the midst of his politics. So I think the post was at least good enough for him to like stop and retweet that in the midst of everything else that he's talking about right now. But see, to be a Tesla shareholder, dude, you have to have balls, right? You gotta really be able to just like weather the storm, because this thing could go to 350 as easily as it can go to 450, and that's just the damn truth about Tesla. So it's like you got, and like I commend anyone who's held onto this thing for the past couple of years. I mean, this thing is not easy to hold. It's really not. Because it's so volatile. There's so many narratives. I mean, it got a big pump because Trump, got elected, but then you got actual real world robotic stuff, updates that Elon's throwing out, 500,000 robots, which maybe is super ambitious, maybe it's under ambitious. I mean, there's just so much to owning Tesla, and that's another reason you can't time it. Like, it's just really freaking hard to try to say, I know exactly when to buy or not buy Tesla. It's an emotional roller coaster. I mean, like, think about this. What if Trump and Elon break up? What if for some reason, let's just be honest, Trump and Elon start to have a bad relationship? What happens then, right? What if they start to have a really good relationship and Trump gives him more than what Elon thought he was going to get in terms of deregulations on self-driving? Like, there's so many factors to this that no one can predict outside of earnings. And it's one of those things where you got to just like deal with it. What if Tesla doesn't get the ability to appeal the Delaware judge that still got rid of Elon's compensation? I think last week they filed an appeal of it. What if it doesn't go through? What if Elon has to do a whole new revote for shareholders on their shareholder day to justify him getting 51 billion instead of 58 billion? Like you just don't know. There's so many variables to this thing. But from what I experienced on FSD, I think it's the future. And that experience alone to me is the reason why I believe it's something that's got to be part of the portfolio, regardless of when you end up buying it. Regretti's below. I keep saying, dude, I don't mean to say regretti, but you guys got it in my head. Is it below 7? Oh my, touch 689. Holy crap, dude. It touched 689. Goodness gracious. D-Wave is down 25.9%. Dude, we all, or not we all, but I mean, I'm surprised none of us actually thought about buying puts on quantum in January. Like, to be honest, bro, I was already thinking of a hedge for my portfolio this year. Like, I was thinking a lot about maybe you go long, short QQQ leaps or something. Like, I don't understand how that idea didn't come into my head. And I saw Skrelly do it. You know, so it's like I saw someone who's, you know, big in finance actually do the play, but I still didn't take it seriously enough. And obviously when the stock falls 50%, you think you should have done it. But like, that must have been the most obvious short ever. It's like, and here's the thing, if you're hedging, let's say you put 10,000 into quantum puts. If you lose the 10,000, that means you should be up way more on all your other stuff, because if quantum's mooning, the whole market should be mooning. There's no world in which Rigetti is up 30%, but Nvidia's not up at least 10%, right? So if you lose the 10,000, it's whatever, because the rest of your portfolio is doing good. That's the point of a hedge. But if the market takes a dump, Rigetti's the first thing that's getting destroyed, or D-Wave, or any of these names. It really seemed like it was so obvious now, which is, you know, what it looks like when the thing falls. But it was a good hedge for anyone who did it. It was not a bad hedge if you did it. Now I don't know if it's the time to go short quantum now. I mean, I still think some of these names are overvalued, but like still, you know, at this point you're getting greedy if you're still shorting it, which it could still go down a lot. D-Wave now down 27%, but you know, does it go to zero? I don't know. There's still a large cult around the quantum names that could start buying it and keeping it elevated. Skrelly is shorting shares, not puts. He wasn't sure on the timing. Jensen supercharged trade. Yeah, that's fair. If I had actually bought puts, it would have been like leap puts. So my puts would not be up like 1,000% or anything, but it would be up probably like, you know, 40 to 50%. And it would have been a decent hedge on like 10 or 20 grand in the portfolio. But Jensen really supercharged the comments by saying what he said a couple of weeks ago. How much were the puts up? Dude, some of these puts were up like 30,000%. Now, again, those were the ones expiring like the week of the collapse. Like, it was insane. And it's hard for people to time that, right? But if you had puts, you know, a year out, 2 years out, they were up 30 to 40%, which is a great hedge against a volatile asset. You know, it's not bad to be up 30 to 40% off a couple weeks on long dated puts. We're already bag holding Tesla, folks. Look at that. We bought at 391. Now it's at 388. We are already bag holding Tesla. Welcome to the life of being a Tesla shareholder. There we go. Okay, let's see what else we got going on with the suits. The Fear and Greed Index, we are officially at extreme fear at 24. 10-year is at 4.776. The dollar, has it come down even a little? The dollar just keeps going up, 109.93. Markets are not really recovering, but they're definitely bouncing a little bit. But this dollar is not going down yet. Let's see what the suits are saying, and then we'll get through some other upgrades because we got a bunch of other headlines this week. Let's get an update on the LA fire. That's actually something we should take a look at right here as well.
Oregon. Yeah, David, good morning. And we are seeing some actual glimpses of hope here in this firefight. We've just heard in the last hour that officials say this Eaton fire is now more than 30% contained. That is significant. And that's really as a result of some of the winds dying down over the weekend. We know Palisades fire still sits around 12 to 14% contained. A significant firefight still going on there. But this is an ever-evolving firefight. And despite the progress here, David, the main concern right now is that we do have winds expected to pick back up today, tomorrow, even potentially into Wednesday. And that's why officials are stressing that we are not out of the woods just yet. This devastation behind me, clear proof of what this fire is capable of. The cause still remains under investigation. We do know that the Eaton fire and the Palisades fire have had investigative crews go back, try to locate the origin of the flames, also using surveillance video, ring cameras in some instances, to try to paint a picture of what exactly happened on that fateful Tuesday afternoon when the flames took off. Meanwhile, we still have more than 100,000 people in the greater Los Angeles area that have been displaced as a result of these fires. Relief centers are popping up all over the city. We visited a location that the Red Cross had opened up, in a rec center. They are at capacity, housing people from the Palisades fire. And David, you hear one story from one person and you realize that they are not the exception to the rule. They have lost everything in some cases but the clothes on their back, and they're having to rebuild their life from scratch. Fortunately, we are seeing more relief, more donations pour into this area, which is an encouraging sight despite the devastation that remains. David?
Yeah. Morgan, we know that firefighters successfully beat back, I think, the Palisades fire from encroaching on a key residential area such as Brentwood. Is that still a risk with the winds starting to pick up again? Or does the level of containment mean that at least there's a hope that a lot of residences are going to be saved from here?
Yeah, David, I don't want to steal any words from firefighters here, but they would say everything is a risk as long as these winds remain high. They've issued that particularly dangerous situation label from today through Wednesday. That is something that they do not take lightly. So while they have been able to protect property near Brentwood, as you mentioned, in Mandeville Canyon, which is where there was a firefight over the weekend, there is certainly no letting up with the knowledge that these Santa Ana winds could return. David?
Morgan, appreciate that.
They did return over the weekend as well. And again, Brentwood got some more fires. It wasn't as intense as it was on Wednesday, but still, it could happen. And that's the tough part about this, dude. If these fires come back and they get even worse over the next couple weeks, which, hopefully that's not the case. But if that does happen, again, it's a very, very, very tough situation for the state of California. Obviously, there's a lot of politics attached to it. And it's going to be inflationary as well, dude. It's not a global black swan, but it is a black swan that came out of nowhere, and now we're going to have to figure out what the implications of it are going to be like. Doesn't Palantir have a product for this? Yes. So Palantir works with PSE&G, and they've navigated California wildfires before. There's a good video of Palantir working with them from a while ago on fires. I think this was uploaded like 2 years ago. I definitely think there's a world in which Palantir could be helping, or at least helping the recovery, helping the re-optimization of building all the IT infrastructure, all the electric grids that fell. I don't know. Maybe Palantir gets a bid here. Maybe Palantir steps in and says, hey, maybe this is where the Elon connection matters, right? Because you got Elon actually suggesting that we need new software to deal with this stuff. Who knows? But I definitely think there's a world where Palantir could benefit. One thing that Elon is doing, Cybertrucks, people that ordered Cybertrucks in Los Angeles are going to be getting them delayed by a couple weeks because Elon has essentially donated the Cybertrucks to be a power-based station for Starlink to create more connectivity in the city of Los Angeles, which is just a really amazing thing that Elon's doing right now. So we do have some relief efforts by Tesla by providing more connectivity to people. Bitcoin 92.6, really nice rebound from 89, but that will delay some Tesla orders as well. Obviously, I don't think anyone's going to be too sad that their Cybertruck's delayed for this type of a reason. But there's a lot of unknowns, man. There's a lot of unknowns going into this California situation over the next few months. And if the wind continues to get bad, then it's not going to be the best. Who lives in LA? Who's in the chat that lives in LA? You put in the chat if you actually had to evacuate, if any of you guys are like in that area, or if you've just been watching it from your windows. I can't imagine, bro, like just sitting near my window and watching my state 5 miles from where I live burn down. Like that's just, I can't imagine, bro. It has to feel like you're living in a movie. Like it just has to be insane to even imagine that's happening. Admit that 165 billion number is low. By the time California does its Californiing, it'll be 200 billion. It'll take years to have this paid out. Yeah, dude, I think it could get a lot higher than 200 billion. I agree. 165 is the estimated losses right now, but we're talking about the most expensive homes, not in America, but in the world. Not only in California, but in the world. I mean, there was a house, the Succession house, $83 million, gone. $83 million house. And I'm sure there's a couple other houses that are a little bit above 83 million. Like this is just, they're gone, How do you estimate the losses from those? going into the next 5 years. Eddie says, I was in LA. It's 5 miles from me. Wow. That is insane, dude. 5 miles away from like an apocalypse. Like, or what it feels like an apocalypse. All for you was watching. MK says it's like a war zone. I saw some Snapchats. Snapchat has this feature where you can like click on a certain location and just see the stories. And it was tough, dude. It was really tough, especially last week. It was really sad. I have a friend from LA staying with us in Las Vegas. See, Angel, you're a great person, dude. I just it warms my heart when people open up their resources to people that are struggling. So, I mean, and you know, to a lot of people's credit, I've seen a decent amount of posts just on the internet in the midst of all the divisiveness we've seen. I have seen people open up their homes, and Bitcoin now 93. Try to be a good citizen, just a good person, a good human being. But it's gonna be tough, dude. I mean, there's people that lost everything here, and I know a lot of them are high net worth. I get it. But nonetheless, dude, I mean, like, even if you're a high net worth individual, if your daughter painted something in 2nd grade and it was on your fridge and that's gone, you know, it's like, I don't care how much you're worth, like, that hurts, you know, to have the priceless memories gone forever. It hurts. And it's one of those things that just, it's a lot of sadness that's going to have to be navigated over the next few years for a lot of these people. Ray was laughing at me because I said the Hannah Montana house burned down, but what made me sad was I saw a TikTok of a girl saying my grandparents live in the Hannah Montana house, so that made me sad. Yeah, there's a lot of celebrities that had very, very big properties, even if they didn't live in those same properties, that were just destroyed. I mean, there were some YouTubers I know that live in the Pacific Palisades, and they're not like super, super high net worth individuals, but they still were, I guess, quote unquote, wealthy enough to live in that area or somewhat near that area. Houses burned down. Completely burned down. And these are YouTubers I've followed for like 10 years that I've enjoyed their content, you know, it's just gone. It's absolutely insane to kind of see how this is ultimately turning out. All right, let's get an update from the suits as well, get a little bit more on bond yields, the dollar, and some macro. And then we'll keep going from there.
We got a chance to speak with Treasury Secretary Janet Yellen, of course, one of the foremost economists. She led the Fed as well. I asked her what she thought was the message from the rising bond yields. Listen.
Surprises to the upside on indicators of the performance of the economy that suggest that the path of interest rates going forward may be a little bit higher than people expected. I think there's also uncertainty that has increased about where the economy is going, what future policy will be, and the so-called term premium in interest rates over the last number of months looks like it's gone up as well, although from abnormally low levels.
That term premium that everyone's talking about, sort of the extra risk that long-term investors are demanding, it gets to the concerns about debt and deficits. Here's your latest look from the New York Fed, and it is elevated, David, highest since 2015. So
yes, since 2015. Okay, I was wondering how long, because it's still not, as she said, it's off
very low levels,
very low
abnormally low levels.
Right.
And look, 2015, so you know we're not at extreme levels, but I do think there's this combo of monetary policy and fiscal policy concerns, and that's how you deconstruct the move in bonds. And you know you've got a pro-growth administration.
Rocket Lab is down 10%. Is anyone thinking this is only because of Blue Origin, or is there actually a headline? Can someone say in the chat? I think it's because of Blue Origin, but let me know if there's anything else besides Blue Origin, which is kind of weird that Blue Origin's affecting it this much, but it seems like that's the reason.
Coming in where some of the worst case scenarios are starting to get priced in around tariffs being inflationary or immigration being inflationary.
Not immigration, deportation.
Deportation.
Yeah.
Immigration policies. And until we get some sort of clarity, and as long as the data comes in good, it feels like yields are just on this march higher toward 5% on the 10. I mean, we hit 5% once in 2023, yep. Carl, but briefly. And before that, it was a pre-financial crisis phenomenon. It's been a while.
Yeah, we're definitely going to be, tomorrow's an important day for the markets overall, global markets. S&P and Dow are coming off the worst day since December 18th. Our next guest says, be cautious due to, quote, unusual seasonality, adding that market concentration remains a major risk this year. Vanu Krishna, Barclays head of U.S. Equity Link Strategies, joins us this morning. Vanu, good to have you back. As we were saying, we're all bracing for some numbers that we hope are not warm. What kind of risk do you see embedded in stocks right now?
I think the risk first primarily on the valuation side, because I wouldn't call them rich in aggregate, but they are.
Okay, so kind of same argument Barclays has been talking about for a while, which is that valuations are up. I mean, look, none of these analysts are saying anything really unique or original right now, especially as we're continuing to see more volatility. I think what's really going to be important is their take after CPI. That's going to be when I want to hear if analysts are still kind of bullish right now, if they want to buy this dip, or if things are getting a little bit choppier. Wow, we're getting a little bit of a retest, folks. We were rebounding, now we're red again. Robinhood testing below 39. Tessie 385, SoFi 1383. Right, it was at 14. Now it's down. Rigetti is definitively down below $7 at 680. D-Wave is down 28%. It was down 26% at 1003. Now it's at 1027. IONQ is down 12% after winning a $54 million contract with the Air Force today. I mean, that's tough, dude, to lose 12% after winning a big contract. Rigetti's down 24%, and then QUBT, Quantum Computing, down 21%. Oh boy. 1030 slam, yeah, we're getting to the 1030 slam as well. And I agree with Doug. It seems like Rocket Lab's down simply because it was up a lot. And it's taken a breather, which is fair. I don't think it's bad for it to be down 10%. I was just curious if there was a headline, but it doesn't seem like there's a headline. It just seems like it's down to be down. Especially as this 10-year continues to stay higher. All right, who bought the dip? I think I asked this question, but then I bought Tesla and I didn't read any comments. So put in the chat if anyone bought the dip today. Who bought the dip? Who bought anything? I mean, I like who bought there's some names that are seeing a little bit more of a dippy dip, and there's other names that are, like, I would say Rocket Lab's a dippy dip. Down 10% is a dippy dip. You can't deny down 10% is a dippy dip, but you know, SoFi down 2.4% is not really a dippy dip. Okay, Tuan bought SMCI, Randy bought RZLV, Umar bought NVIDIA, Puneet's still waiting. Matthias bought Google, Big Bear AI, and Short VIX. Interesting. Betting a bit more bullish. Erwin bought 500 of Rocket Lab. Bought some NVIDIA. Scott sold some Rocket Lab puts. What are the premiums going at for the puts? Let's see. How good are these premiums, bro? I'm going to go to $19 on Rocket Lab a month out. How good is that premium? $19, Rocket Lab. That's what, 70 cents? That's 4%. That's not horrible. That's not a horrible price. Especially on a day like today, this is not horrible. It's just a question of if we actually do get to 19 or stay into the 20s. John bought some AMD. Chad bought Nubank and Grab. D-Visual bought TSLL and SOXL, so semis and Tesla. Chamu bought Leaps on NVIDIA. Wow. What strike, Chamu, did you get on NVIDIA? Dude, I want to buy NVIDIA. I just want to buy NVIDIA stock as well. I just feel like I need to still know a little bit more about NVIDIA. Like Tesla, look, if Tesla goes back down to 300, whatever, right? I feel like my conviction is starting to really get there. A, because robots, you guys know how much I believe in that thesis. By the way, there might be a big interview coming soon. Just stay tuned on that. And then two is FSD. I mean, now that I'm experiencing it, I'm like, there's no way this is not the future. But NVIDIA still, bro, are they really going to grow in 2026 enough to justify these numbers? I don't know. I don't know. That's always been my hesitation on NVIDIA. AMD and Celsius. Where's Celsius? That one bottomed at like 25, right? Back to 26. It was at 30 a couple weeks ago. Back to 26. I did not get Elon for an interview, no. Although he retweeted me, it's not him. It's not Elon. One day we will try to get Elon, but not yet. My cost basis on Rocket Lab is around $5. I'm good on any pullback. See, Troy's comment is exactly how I feel on Palantir. I don't have a $5 cost basis on Palantir, but is it like I sleep like a baby, dude? Like with all the volatility that Palantir's had, which, you know, down 15% isn't crazy for a stock that was up 400% last year. And even Rocket Lab down 8%. I mean, are you kidding me? This thing was $5. It got up to 30. Like, if you really got in early, this is not the time where you want to secure your profits. This is the time where you're like, okay, let the street figure out the price. If I believe in the thesis, I'm holding on to my $5 average, and I'll see you guys at 100, right? You get to really sit back and relax and not stress it too much. But now if you bought Rocket Lab at 30, you're probably annoyed. But then again, if you bought it at 30, like I can't be mad that Tesla's at 387 if I just bought it at 391. I know that I'm buying Tesla after a massive run up. You got to be okay with that. But I'm also not super scared about it given we understand how much it has run up. SMCI down 6%. DJT pumping, bro, up 10%. DJT is up 10 freaking percent. Looks like the market's excited for the inauguration. What else do we see? CEG is down 7%. They were up like 30% on Friday. So that's a regular pullback after their acquisition. Nvidia is still down 3%. Tessie 387. The Q's 501. Schlumberger up 3%. Oil and gas doing great today. Robinhood still holding on to 39. Moderna down 23% still. Bitcoin 92.3. It was just at 93, back to 92, but it is up from 89, which is nice, bro. To see it rebound from 89 that quickly, like in a matter of 5 minutes, that means there were plenty of buyers that stepped in at 89 and they were like, this is stupid. We're buying, which is, I think, very healthy. And it's just a question of how long we can continue the risk on appetite for crypto. When are we buying India mid? Okay, so actually, that it might be sooner than later. So here's a chart on India that's actually, I was talking to my uncle this morning. He thinks that India is starting to get cheap after being expensive for a while. This is the chart right here. And this is mainly for a still a reason for India. So take a look at this. The India rupee plunged to a new all-time low against the US dollar. And that is why we're seeing some volatility here. Yeah, he's in the chat. So he thinks buying now is not horrible. Again, India's been expensive for the past couple of years, given how much momentum they've had. But really, ever since the China stimulus started happening in September and money started rotating India and going to China, and then ever since the dollar started mooning, you've seen India not do as well. And, if you believe in the India growth story in and of itself, then maybe it's not a horrible time to at least DCA, not like go all in, but at least start the process of getting into India. Amit, make a long video testing FSD without any cuts in the city. I think people will be interested. So I am legit thinking of starting a Tesla FSD YouTube channel where I'm going to sit in the car for 40 minutes, probably a couple times a week, and show you guys the highways of New Jersey and the streets of New York City, and just talk in the car. Like I was like, dude, I'm really inspired by FSD to like start a channel and do that. Like I think it would just be cool to just like have a little side project for 2025 and really test out FSD. It would give me an excuse to keep using more FSD. And I think it would be fun. I think it would actually really be fun because there's a lot of FSD videos on YouTube of California and San Francisco, but there's not a lot of New Jersey and New York. And I think as FSD gets better, it's going to be even cooler to make some of that content. So that's on my mind. I think I'm going to do it. Like I have the idea for it. I think I would be able to do like 2 videos a day. I would just be talking about stocks in the car. So, nothing too crazy. It would kind of be like these streams, but in the car with me just driving. And so I might do that. It might be fun. Yeah, stocks and cars. Also, we could get guests on the show as well. We can get people in the passenger seat and we just talk about, like, I think it'd be a little fun series, a little mini series that we could start. And again, we can show really complex streets and highways in New Jersey and New York, which I don't think there's that much content showing that stuff off in on YouTube at least. I thought you said you were trying LSD. Dude, I'm too scared to do those drugs, bro. I am too scared to even think of doing those psychedelic drugs. Like, dude, like my mind's already crazy, bro. It's already running 1,000 miles an hour. The idea of doing mushrooms or LSD or any of that stuff, bro, I think I would legit go insane. Like, I don't think I could handle that. I don't think I could do it. You could drive your cars to the meetup. Yeah, that's true. I could drive my car to the meetups as well, especially on the East Coast. That could work. I could get Steve and do a podcast. Oh, that'd be great. Because Steve hates FSD. He hates it. He like loves the process of having a gas guzzler and driving his car. So he would be a great guest. He might actually like it. At least if you try LSD, you got FSD to get you home safe. That's fair. Dude, I legit think if you like, I don't think anyone should do this, but if you were high in that car on V13, I didn't touch the wheel for 40 minutes. And I'm just like, okay, so this is only gonna get better and better and better. Like, there's no way this is gonna get worse. So if it's gonna get better and better and better, then I can only imagine what people would be able to do in the car from a work perspective, and still be able to survive. And then the question is, what is that worth to Tesla? I think it's worth a lot. Like a lot. And there's gonna be other players like Waymo as well, but like if those are the two guys that are really winning this, NVIDIA's whole synthetic data they're doing for OEMs, like sure, maybe that could work. But let me tell you, there's no way in hell I trust a Toyota built on NVIDIA's synthetic real world data over a Tesla that has 75 billion miles of real world data. In fact, what's the point of synthetic data if we already have real world data? Like, I'm starting to rethink the entire NVIDIA announcement on that part. There's other parts that were really bullish at CES. And NVIDIA's probably gonna make a ton of money from Toyota and Honda and all those companies, but why would I trust synthetic data? Like, who the fuck is getting in their car, trusting their parents coming home from the airport on fake data trained on a car versus the alternative, which is arguably 10,000 times better because it's real world data. And now when you experience FSD, you can obviously feel the difference in terms of how better it is. How does NVIDIA compete with that? I don't get it. Like, I really don't get it at all. I don't understand how that makes a lot of sense. So, and I'm not saying the synthetic data is going to be bad. I'm sure it's going to get better and better over time. There's going to be innovation there. But like, why would you, forget the stock, why would you buy a car that is trained on synthetic data? Unless you hate Tesla or you just like don't like how the design looks, whatever. But if you're okay with the concept of owning a Tesla, and then FSD is like what gets you over the decision to actually buy a self-driving car, how do you pick a self-driving Civic versus a Model 3? Or a $25,000, $30,000 car that's going to be coming out soon? Amit is so bullish on FSD now. Yeah, dude, like the reason I'm bullish on FSD now is because I experienced it. And look, yes, I agree with Kenneth, dude. I'm not saying synthetic data is not used in parallel. I 100% get that. I'm just saying Toyota doesn't have damn near 10 million vehicles on the road that are capturing all that data. Like, they're trusting NVIDIA to help them create the data, which I get. I think it's undeniable that Tesla has the actual data moat that they're getting, and that's getting better and better and better every day by the second. So is there a world where synthetic data matters and it's going to be valuable? Yes. But as a human being, forget the stock, as a human being that just wants to be guaranteed their safety, I don't get why you would pick synthetic data over real world data. Or like for a company that doesn't have the source of real world data like they do with Tesla. So, yeah, I don't know. Maybe it's just me being high off the experience I had with FSD, but maybe if I experience a synthetic Toyota Corolla trained on NVIDIA's Cosmos platform, maybe I'll feel the same because it's just as good as FSD V13. Maybe that could happen. To nuance my thoughts here, maybe that is a world we're getting to where Tesla's data advantage doesn't matter. Maybe it gets that good. Maybe AI is that amazing. NVIDIA's Cosmos platform is that fantastic that they can give the same type of Tesla FSD to every single OEM. But if that's not the case, I don't get why anyone would pick fake data over real data when you have the ability to get real data. Unless you just don't want to drive a Tesla, which is fair. But if you're fine driving it, then I don't think it's the worst idea. Let's get an update from Zucks. For those that haven't seen the soundbite, I'm sure a lot of you guys have, but Zucks definitely took some shots at Apple over the weekend. And let's get some updates on that.
But it just, Apple has a specific protocol that they've built into the iPhone that allows AirPods to basically connect to it, and it's just much more seamless because they've enabled that, but they don't let anyone else use the protocol. If they did, then there would probably be much better competitors to AirPods out there. And whenever you push on this, they get super touchy, and they basically wrap their defense of it in, well, if we let other companies plug into our thing, then that would violate people's privacy and security. It's like, no, just do a better job designing the protocol.
That was, of course, Meta CEO Mark Zuckerberg on an episode of the Joe Rogan Experience on Friday, slamming rival tech giant Apple. Just the latest in a long feud between Zuckerberg and Apple, and it's not hard to see why. Obviously, Zuckerberg even himself said if they didn't have the random rules, that Meta would be a lot more profitable. Clearly, they compete on the sort of headset vision quest, and he went after Apple for not innovating in a long time. They compete with their own virtual reality headset. But the whole shift right from Zuckerberg is just fascinating, and really capped off a week of it with the Joe Rogan appearance. He really is moving toward the Elon Musk playbook. And I do wonder what he wants from President Trump, as he has now met with him again at Mar-a-Lago this past weekend.
Well, not getting jailed might be a start.
Not getting jailed?
Yeah, put in jail, as President-elect Trump wrote about in his book.
I don't know if there was really a chance of that. Less regulation, maybe, for big...
I don't actually think Zucks was going to go to jail, but I agree. I think he wants to have a friendly relationship with the next administration, and if Vance is up next, you've got an extension of the Trump administration for the next 8 to 12 years. I mean, if you're going to pivot, now would be the time to pivot.
Tech, just overall, I mean, the shift on DEI,
getting himself in favor
just getting
with the
comfortable.
current powers that be, which is something he's very good at doing and has been good at shape-shifting, so to speak. Interesting, the criticism of Apple, stock of which, by the way, is down almost 8% for the year so far, so not off to a good start. Obviously, our viewers remember when Apple changed iOS, and for a period of time, Meta was in a very difficult position in terms of its ad targeting. Then they came back, roaring back, obviously, with the new algorithms and AI-driven ads that have allowed them to monetize it at an even higher rate. But it's not as though there hasn't been, I wouldn't call it bad blood, but certainly some difficult times between the two companies.
I mean, it was straight out of Musk's playbook. He also went after the new class of creators, the elite, the cultural elites, and said that,
I just got a headline. I don't know if this is correct, but Peter Beck sold 51 million shares on January 10th. Is that true? I'm going to try to find out if that's true right now. That seems like a lot of shares. I feel like either those are options, and that's a little manipulated in terms of the headline. Or can anyone confirm that 51 million? I don't think that's true, bro. I don't know if that headline is correct. Someone let me know. 50 of Rocket Lab. He's the CEO of Rocket Lab. There's no way he sold 51 million. Rocket Lab only has like 500 million shares outstanding. There's no way this headline is real. I don't think so. Oh, someone else said it right here. Thanks for the $2 super chat. Rocket Lab sold. Is it $51 million worth of Rocket Lab? Because that makes more sense versus 51 million shares of Rocket Lab. There's no way he bought he sold 51 million shares. That would have tanked it on Friday, and that didn't happen. He might have transferred to his trust. I'm going to try to figure it out, but I don't think he flat out sold that many shares. Also, how many shares does he have? Does anyone know? Let me see if I can find that date as well. Let me see. His preferred were converted to common for his trust. Okay, that makes way more sense. That's not really selling them. That's just a conversion. Yeah, that's a bad headline, dude. That's a fear-mongering headline. If that's the reason we're down 10%, then that's a very stupid reason for it to be down.
there should be a new crop of social media users. There should be a reordering of society, and he sort of hammered the media in particular, and TV anchors and news people. I thought that was it. I don't know what his beef is there.
He also told Carl and I that we can be more masculine on set now, Sarah. So
he was talking about corporate culture.
Oh, is
masculine
that? Oh,
energy.
okay. Sorry, I didn't realize.
I think the 9 a.m. is plenty masculine. Don't know that we need that.
Thank you.
But I think he was talking about the shift in corporate culture, saying that that sort of aggression is not there.
Zucks is pivoting. We know he's pivoting, and that pivoting is probably going to make him money, but we're going to see if that pivot is as successful as he wants it to be. There are some headlines in Meta that a lot of the more liberal Meta employees are pretty upset at Zucks getting rid of DEI, which was the headline on Friday. That is confirmed. That's not a rumor. All DEI initiatives at Meta are being slashed. So we're going to see if employees revolt against that, or if most employees wanted that and they've been waiting for Zucks to do this. But I think in the next few months, we're going to get more updates on that. Let's finish with Gabriella Santos. We didn't finish her clip this morning, so let's go back to her and see what she has to say.
Because it's obviously in the headlines. Does what's happening in Los Angeles, do you think, have any meaningful impact on GDP over the next several quarters? If not longer? And by the way, you could argue it could have a big impact in a good way, insofar as all of a sudden there's going to have to be enormous amount of spending. But there could also be losses.
Of course. And you see that with natural disasters, right? There's a temporary, at times negative effect, which is made up later as there's rebuilding that takes place, and then it just nets out over time. But I do think it brings up a really important point around when we speak to clients about inflation. You know, we speak about it in economic and market terms year over year. Yes, it's normalizing. But there's a cost there around auto insurance, home insurance, which is not just about California, right? It's about a lot of states in the country. And I think that explains a lot more of the malaise, the frustration about the current costs and about the current economy. That's not just reflected in, of course, how we think about it as economists or investors.
What do you think, just so I understand, what do you think's happened in the last 5 weeks? Meaning, why do you think that the sort of mind...
Folks, we are not bag holding Tesla anymore. I am up $10. I was just down 15. That's why you got a DCA. You never know. That's why you got a DCA.
Shift has changed. Everybody, you know, was in this, I don't know if it was a Trump trade. I don't know what you think it was, but November, December, it was like we are off to the races. And then everybody went for the holidays and decided, or maybe even before the holidays, decided maybe not.
Yeah, really before the holidays, right? So we started pricing in the Republican sweep mid-September. So there was quite a long period there. And then you started getting to December, you know, you start getting into the weeds of the details. So what exactly is going to be the sequencing of policy? How is that going to net out as is it going to be a net positive, net negative for different assets? And I think for equity specifically, right, there was much more of a focus on the positive aspects and now much more of a recalibration, which can continue this week. On Friday, we're going to get the new CBO forecasts around the deficit and debt projections. And I think that's really what's driving this 80 basis point rise in real yields since early December. And just based on current policy, the deficit is set to rise to 7.5%. And then we still have to factor in the discussions that will start taking place next week and for the rest of the year.
All right, so you got Gabriella Santos, who is, again, one of my favorite analysts from JP Morgan, who's been relatively bullish in 2024, continuing to maintain that trajectory and believing that the 10-year yield kind of controls asset prices. And once they go down, you should see equities do okay. This is the 13D from Peter Beck. So apparently, as Matthias and Erwin say in the chat, the shares were converted 50,951,000, so basically 51 million, into an equatorial trust, which to me, this is what Vlad has as well in Robinhood. Vlad doesn't own his shares, his trust owns his shares. And every time they sell or buy, it's from the trust that's selling. So this is not a sell at all. And I don't think Rocket Lab's down on this, but if Rocket Lab is down on this, then this is the dumbest dip ever because he's not selling any shares from this. The reason a lot of these guys put their shares into a trust is primarily, I think, for two reasons. Number one, for tax purposes. Number two, for their family, right? So if you have a trust, it's shielded from some certain taxes, but B, you're able to pass down shares in a much easier way. Also, there's different philanthropic things they can do with it. So there's a lot of reasons they do that, but that is one of the reasons why it looks like that happened. Are we bouncing, folks? Are we bouncing? Is it back to AI revolution?
In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m.
Are we still at? Are we at 9 p.m.? SMCI down 6%. Grab recovering, down only 1%. SoFi back above 14. Tessie, hold on. I'm up some real hard-earned dollars on my Tesla stock. How much am I up right now? I'm up $27.57. $27 could pay for a nice lunch. I'm not gonna lie. I'm just saying there. Now I'm up 19. Dude, why is it so volatile? Goodness gracious. Goodness, Tessie. DJT's at 40, best performing stock of the day. Broadcom's at 225, HIM's at 26, Robinhood almost at 40. Everything is still red, but it's not as red as it was at 9:30. Not at all. Nvidia was at almost 129.5. Now it's at 132. Palantir nicely holding 65. And then Quantum, are we getting a little bounce in Quantum as well? Little bounce. So instead of being down 28%, D-Wave's down 26%. Rigetti, instead of being down 22%, it's down 20%. So it's very little bounce in quantum, but we do have a small bounce. Mid-lock profits in on Tesla. Oh my gosh, dude. It is nice to actually own some shares of Tesla though. And I'm very, I just feel like I'm more likely than not I will have to DCA down because I mean, it's January 13th and we got a lot of volatility coming up. I don't know if 391 was the bottom for the rest of the year, but nonetheless, it's just the process of continuing to DCA. But again, I'm waiting, just like all of you guys are waiting that have cash, for like the dippy dip. And I don't know, I feel like Tesla 350 is the dippy dip, Meta 550 is the dippy dip, Google 170 is the dippy dip. But I think we're gonna have to see if we actually get there or not. I'm officially a Tesla fanboy, correct. I'm officially a Tesla fanboy. But again, for me, it's not, I'm not building a brand off of Tesla or anything like that. I'm not like Sawyer Merritt or any of these, Tesla YouTubers. I was just genuinely impressed. And I think it's genuine for me. The reason it's genuine is because you guys saw me on Finance Junkies 2 years ago, literally have argument after argument about FSD. And I was like, Carlos, what are you talking about? Who would get in a car that drives themselves? I didn't see the vision at all. So this turnaround is, let's just say this turnaround wouldn't have happened if I didn't buy a Tesla. I would probably still feel FSD is whatever. Once you actually feel it, it's just like, goodness, I can't imagine life without it. Even if I'm just going to the grocery store, I don't want to drive. Why do I have to pay attention to turn at the stop sign? Like, let the robot do it. I don't need to worry about that. Like, just the idea that you don't need to worry about making a left turn because you know the robot's going to do it. It's just it's an unbelievable experience. Absolutely unbelievable. And I think we just, we have to keep building on that experience. Don't you unlearn driving? I actually do like driving the Tesla. The regenerative braking, makes it fun to drive. But I don't need to. Davis has a great comment here. When are you going to turn around for me, Amit? I need the sound on the soundboard. That's like, what's the sound that you play when someone says pause? I need that sound. You guys got to give me suggestions for sounds. I need more sounds. I have an unlimited number of sounds I can pick, guys. Unlimited. We can have sounds for anything. I saw you guys in the chat say carp. There's some good carp sound bites that we got to put on here. I think carp has that one sound bite where it's like, it's fucking cool. Like that sound bite we got to have. I have this one I haven't used yet. This one is the explosion. That's if anyone was driving, sorry. But like, I gotta have the cartoon one when a stock's going down. It's like, boo, like it just keeps falling, like it's losing air. We gotta get that one. We gotta get so many. Oh, Peter Thiel's ums. Oh, that's perfect. That's perfect. Like when you don't know what's happening in the market and you press that because you can't explain anything. That's not a bad one. Can we get your PayPal reaction as a sound? Oh my God, this is a perfect one. This is a perfect one. Dude, there's people on this channel that still have never seen that video. I think maybe we play that video later at the end of the show. There's still people that have never seen the Amit PayPal reaction. Dude, we went viral on Wall Street Bets, and it was kind of hilarious because everyone was laughing at us for good reason. But still, it was epic moment. I'm not going to abuse the soundboard. I'll promise you that. I'm not going to abuse it. But there are certain moments where like you want to have a sound, right? Like there's certain moments where it's like it's just perfect to have a good sound. And it's like obviously the cowbell, but it's not going to be like every 5. I mean, that was the Dan Ives sound and the explosion sound, which I used just to play it for you guys, was like the first sound in an hour. So I don't want to abuse it or anything, but there are going to be good moments where it would be nice to hear something that accentuates the point we're trying to make. That's how I started watching your channel. I found that clip going viral. That's crazy, bro. That's absolutely crazy. Okay, let's take a look at this. So I want to show you guys this clip because I saw this morning, and I don't know if anyone saw this yet, but this whole Greenland thing that Trump's been talking about like owning Greenland, I haven't understood it at all. Like, I don't know why he's been saying this. Apparently, there's a real reason, if you go deeper into it, into the Olin podcast did a great job kind of dissecting it. And it goes to show why some people are excited for Trump to get into office, because they really do think he's going to have better negotiations than Joe Biden. Take a look at this clip. This is the Olin podcast actually talking about why Trump wants Greenland.
I started to learn a little bit more about why he wants to take over Greenland. And it really comes down to one very basic idea here. Because of climate change and other things, the Arctic ice shelf is melting. And the more and more it melts, it opens up a shipping lane in the Northern Passage for a lot of critical goods. And so if you had some sort of strategic agreement with Canada and Greenland, you effectively have this monopoly control over something that could become as important as the Panama Canal. And so I think if you look across the world, the control of maritime shipping lanes becomes this really critical strategic military and economic asset. And so the reason why he's trying to find a way to initiate some sort of a discussion between Greenland and Canada is exactly this reason. And I think it's sort of like a bargaining gambit, the way that he started, but it's really smart that he's trying to get this done for the United States of America. Because meanwhile, what you have is China militarizing very aggressively, Russia
Who agrees? Does anyone think that's smart? Do you buy that explanation by Chamath, or you think it's BS? Who agrees?
militarizing very aggressively. And what you don't want to have happen is those two countries take control of that Northern Passage as the ice sheet melts. So I just thought that was important.
Having a capable business executive thinking about the future of business and shipping and logistics, pretty big win. And I just love the idea, Cyan.
You know what's smart? I mean, let's give Trump credit. What's so smart is like somebody was doing this work.
Yes.
Got it in front of him.
Yeah.
And he was smart enough to say, hold on a second, this is really important.
Let me tweet it.
And then the way that he initiates it, though, gets even more attention, because if he basically tweeted, hey guys, I have this really interesting idea to gain more leverage in a northern maritime shipping lane, nobody would have paid attention.
Absolutely not.
Nobody would have. And now we're all talking about it. And now there's an opportunity for millions of people to understand why and be supportive of it.
I do think there's a point there. Now, I'm not educated enough to understand everything about the shipping lane stuff. I have to do some more research there. But as a content creator, when I think about distribution and getting people's attention and being able to communicate a message in an effective way, Chamath does have a point. If Trump laid out a thesis about maritime shipping lanes, no one would give a shit. Absolutely no one would care. Versus if you frame it in a different angle. Now, is that the best way to frame it? That's up to people to individually decide. But from an attention perspective, we are talking about it. And, you know, anyone who's even confused starts to research, like, what is the history between Greenland and the United States? Why is Trump talking about this stuff? It gets more people interested, regardless of whether or not it's actually going to happen. Berkshire is green as everything is red. PIMCO's up a little bit. UAL's down. We are going back to red, even though we were slight green, but it's not as red as it was at 9:30. Nubank is recovering from 1078 at 1091. Palantir just below 65. NVIDIA just below 133. SoFi, again, 2 cents below 14. And then Tesla, 392. Tesla showing some pretty incredible strength. DJT continues to be the best performing stock today, up 13%. Amid all this fear today, but CAT is up 2.25%, speculating on fire rebuilds. Yeah, I think that's a pretty logical reason why this thing would probably be up right now. There's going to be a lot more demand from Caterpillar, potentially, based on the rebuilding efforts. And see, the market's trying to find opportunities. The market's real, like, even though, like, you know, the headline names are down, NVIDIA, Palantir, Tesla, whatever, there are different pockets. I mean, oil and gas, again, doing great, even though that's not the best for inflation. If you've been stuck in those positions for a bit, you're green. You're green across the entire board. Banks are somewhat green. SoFi's down a little bit. Bank of America's down. Nubank's down. HSBC is down. Everything else is green. I think banks are going to crush earnings this week. I really do. I think they're going to have a strong earnings, and that should set us up for tech. And then spec names are still all down for the day, except Faraday Future somehow. D-Wave continues to go down. It had a little bit of a bounce. Now it's still down 28.5. It was down 26. Went back down 28.5. Rigetti as well. It was just above 7. Now it's below 7. 691 currently right now. Deere's up 3%. That makes sense. Yeah, UNH. So did anyone catch this rebound on United Healthcare? This thing went to 546. It was at freaking 475 on December 17th. I feel like this thing ran back up to 550 and I didn't even see it happen. This thing ran quick. So there are other value names that are catching a bit of a bid currently right now. Yes, Rigetti. Currently, it is still Rigetti. Shake Shack going down. Well, Shack had a really good year in 2024. Shake Shack, that's down 7%. Maybe there's some headline there to get it down. They had a really good year 2024, so maybe it's taking a breather. Kava as well. Is that below 100 yet? That is 111, so that's holding on. It was at 120 last week. Yeah, look, food and restaurants, I mean, like, if the consumer's fine, I don't think they should do bad. Same thing with Texas Roadhouse. I feel like they should be okay. But they're up a lot from 2024. Yeah, Texas Roadhouse down 1% as well right now. Shop below 100. Dude, Shopify was freaking $40 in 2024. Like, again, those amazing, like, screaming deals, they're not here yet, but they were there in 2024. And so now it's just a question of what opportunities are there. And some screaming deals are there. Like, to me, Grab theoretically is a screaming deal just based on their earnings growth. The problem is it's not a screaming deal if you believe the dollar is going to be elevated. So, like, you can't say it's a screaming buy because this thing could go below $4 if the dollar keeps ticking up or if inflation comes back. So every name that you think there's a screaming deal, I think there's a nuance to it based on the macro environment where, like, Robinhood, is it a screaming deal at 39? Definitely no. Is it a buy in my opinion? Yes, I bought Robinhood as high as 42. I think it's still undervalued for their growth. But if the macro takes a shit, Robinhood's probably going to the low 30s. And so it's like, is Uber screaming buy? I mean, numbers-wise, yeah, but the Tesla FSD narrative is still there. It's still annoying Uber to an extent. So I don't know. If people stop traveling, then Uber takes a little bit of a hit, right? TMDX, oh, is this one recovering? So Scorpion, again, they went short. Wow, it's down another 15%. Yeah, TMDX is screaming. It's not a screaming buy, it's just screaming. Oh my God, dude. Holy crap. Scorpion's getting hit. Chris said, call me. All right, Chris, let's get you onto the show. Let's get Chris's thoughts of what's going on. Dude, TMDX really getting hit. Holy crap. Looks like people are buying into the short report right there. Chris, what's up? Good morning.
Good.
Yeah, dude, what'd you think about over the weekend? What's your reaction to everything we're seeing right now?
This is where I have to say I'm not surprised at all. I think this is all kind of it definitely, this is going to sound like a conspiracy, but whatever. But Trump is basically screwing the markets. All right. He wants the markets to come down significantly before he comes into office. And I mean, to me, it seems like an obvious thing what he's doing. He's showing a lot of, a lot of fear into the markets. I mean, why else would you, like a month and a half, 2 months ahead of inauguration, start with, I'm going to put a tariff on Mexico. I'm going to put a tariff on Canada, our two largest trading partners. I'm going to go after Greenland. I'm going to force the Europeans to buy more oil and natural gas. It's just everything that he says is very, very inflationary. And so I think the market is front running a lot of the stuff that he's saying, and we're feeling the consequences of it. This way, when he does take office, he can pretty much just say, hey, look, Sleepy Joe was sleepy at the wheel, and now the markets are crashing and blah, blah, blah. So this way, all he has to do at that point is just be a lot less, how do I say it? A lot less punitive when it comes to Canada and Mexico, a lot less punitive when it comes to other things. And now the markets will be like, oh my God, maybe it's not so bad after all.
Essentially, what you're saying is like sort of basic human psychology. It's really hard to just keep going up. Trump knows this. He's a business guy. He knows stocks just don't keep going up forever. He even said that to Jim Cramer, right, when they were talking on the floor of the stock exchange. And he said, yeah, well, maybe we'll get some dips. And so you're saying he's doing some stuff to potentially get some market volatility in so that if we do have a 10% correction, it's much easier to have a 10% rebound. And then he gets all the credit for the 10% rebound. But no one's going to give him that much of the blame because if the market's at an all-time high, everyone expects a 10% correction anyway, right?
Pretty much. You want to start from, this is like a basic negotiating thing where you want to start at a lower point than something really high, because it's really hard to come in and try to like outdo an already market that's already on fire. And then you also have the Biden administration counteracting that by spending as much money as they can as they leave so that this way they don't get put in a position where they're taking in a lot of blame, where they can say, look, we created the most jobs of any president, in the last 50 years. So a lot of this is politics, and we're paying the consequences of it, basically. I think that one of the key things that everyone here hopefully remembers is don't follow what they say, follow what they need to get their agenda accomplished, right? So Trump's agenda is lowering trade deficits across the board. Now, how do you do that? You can't do that with a strong dollar, okay? You basically are making imports cheaper and exports more expensive for the United States. So what do you need? You need a weak dollar. What do you need to get to a weak dollar? You need us to lower interest rates lower than what the other guys are lowering their interest rates at. So one of the things that we're seeing is the strong dollar is having this negative impact where all these countries, because of commodity price inflation, what they're doing essentially is selling U.S. treasuries to support their local currencies. Now, as they sell that off, what you're seeing is this kind of like this perverse loop happen where basically as people are selling off their foreign exchange reserves, they're increasing, the supply of treasuries, but at the same time, the dollar keeps going up. And then now there's another thing that's happening, which I'm not sure you're aware of, or anyone in the market is really aware of, but you're going to see hedge funds use something called pretty much a carry trade, where right now you can go to the Federal Reserve and actually get something called a reverse repo, which you can pledge your treasury securities and get and basically borrow more money so you can buy more treasuries. The thing is, the cost to borrow is only like 4.25.
Yeah.
And the 10-year right now, the yield on it is like 4.8. So you're getting this huge, it's not super huge, but you're getting this spread that's available to you. And the one thing that happened in December, which kind of went a little bit unnoticed, is that the 4.5 to 4.25. So even though the 10-year seems like it's going nothing but parabolic up, I do feel like there is a cap, because as the 10-year goes higher and higher, it's more likely that you're going to see a lot of hedge funds buying the 10-year and then applying this carry trade at the same time.
What's the benefit to them doing the reverse repo exactly?
Imagine right now I tell you, hey, Amit, I will lend you money at 4.25, okay? But I need collateral.
Yeah.
So you say, okay, no problem. Here's collateral. Here's my 10-year treasury that pays 4.75.
Right.
You take this as collateral, and I will now end up taking that money, right?
At 4.2.
Basically that I have, because I'm the Fed, and I give it to you in the form of cash. So what do? You go out there and you buy more 10-year treasury, and then next time you pledge more collateral again, right?
Right.
And I give you more money. So it's basically this loop that happens where you're basically you're letting me borrow money at a cheaper rate than the asset that you're basically buying that has a higher yield. And that yield difference is where you're making basically risk-free money.
Right. What are the implications of that on the market? You think that just means that there's less liquidity to an extent?
To me, it means that there is ultimately a cap in how much rates can really go higher.
Right.
I think the data points that are coming out right now are very bearish, and the inflation expectations are really high. But that's mainly because some of the data that we're seeing that's coming out of like the BLS and stuff, maybe, I don't even know how to say it, but basically, stoking fears into the market rather than reality. So right now, we really still don't know what's going to happen when Trump comes to office. I know a lot of people are already like, oh, Trump's going to come in and he's going to do that, he's going to do this. So I think a lot of people in the market, they can't trust who this guy is or what he's going to do. So one of the things that you're seeing is a lot of people front loading on inventories, buying things before he comes into office, because why would you wait? Why would you wait to import all this stuff? Trump comes in, slaps a 25% tariff on on outside good from let's say China. You're going to order your stuff now. So what we're seeing is in the short term, you're going to see higher CPI. You're going to see all these data points that are showing that inflation is reaccelerating. In my opinion, look against that. Like, ignore the noise. Find out when, Trump is actually in office and what his policies are going to be like in the next couple of weeks, and see if his tone goes from being like uber, like, I'm going to go this, I'm going to do this, to more like a moderating pace. Because if he ends up being more moderate, you're going to see the markets reverse. And in which case, you kind of want to be in yield assets like TLT and other things. So a lot of great companies right now that are kind of like not as impacted by the economy, their yields have gone to like 7-8% almost right now. So those companies, their stock prices are going to go much higher if we end up getting a reversal on the interest rate. I mean, the inflation expectations.
So you think CPI is going to be hot, but all of its noise until Trump gets into office and actually begins the types of policies that can take inflation down, or at least get the bond market to cool off a bit.
Yeah, I mean, you saw this with Trump 1 when he first came in. Like, he jawboned his way into getting Fed to lower rates. A lot of the policies that he wants to implement require a weak U.S. dollar. Like, he needs a weak U.S. dollar. Okay, like you just, all the stuff that he's trying to get done, he's not going to be able to get it done with a strong U.S. dollar. It's just not. So the assumption that we have to make is one where the dollar weakens considerably, and now that the dollar is so strong, he can actually go to some of these countries and negotiate a little bit unfairly in the advantage of the U.S. So I don't know how he's going to pull everything off. But in my opinion, there are some other market forces that are out there that are going to really push inflation down this year, that are like almost like an unstoppable freight train. But a lot of people right now, they're looking at the current information, and they think that the Fed is done cutting, and to some people there's even a chance that hikes happen, and I'm like, yeah, bullshit, dude. That's not.
You think there's no chance we're gonna get a hike?
No, because then the dollar will get even stronger, man, and then it would mess things up royally for everyone. There's already a ton of companies out there that are teetering on bankruptcy because the capital markets right now are misaligned with their business models. So it's one of those things that, like, it's a catch-22 right now. So the Fed, the longer it keeps rates high, the more of a chance that they're going to actually cause a recession. Ultimately, we are going to get a recession because recessions are part of the economic cycle. That's just how things are. But you don't want to make it so obvious that you want to crash the market and to crash the economy. I think the one area that they should really, really 100% focus on is shelter. And the core component of shelter is owner's equivalent rent, because that is on a downward move, and I'm seeing inventory pop up everywhere. So one of the things is December, usually there's like a good amount of housing that comes off the market. But this year, you didn't see nearly the amount of homes coming off the market, and you're starting to see inventories in certain parts of the country grow. So that is going to eventually lead to lower rate of growth in real estate, and possibly even somewhat of a downturn. And if we do get a downturn in real estate, like maybe, 4 or 5, maybe 10% correction in real estate, that causes almost like a reverse wealth effect.
Yeah.
And now that makes people stop spending as much money, cut back on spending. And if people cut back on spending, now you've got lower growth. And if you got lower growth, you've got lower inflation expectations. And if it becomes too serious, then you got yourself deflation, which is what China's going through right now, because they have a giant property bubble that basically burst on them. And now they're trying to get back into growth mode, and no amount of stimulus is working. Granted, they have a much larger problem than we do right now. But I think all the policies that I'm seeing are leading me to believe we're likely to get into a more disinflationary and possibly even deflationary scenario by the end of this year. And the way that we should be positioning ourselves is against the tide. Don't follow the current narrative that inflation is going to go nothing but up from now on. That was the mistake that was made in October of 23. That was the mistake that was made in May of 24. And then kind of in August of 2020. Well, not really in August, because that was the carry trade blowing up. But those 2 times were the ultimately the ones that are the best examples of how the narrative can shift on you very quickly. And if you're smart, you can make a ton of money.
I think that's a very good point. And I think it is, the fact that Bank of America says we're done with cuts, to me is okay. So it's a little bit reactionary towards some of these inflation expectations. And maybe that mainstream narrative isn't going to be the case. Couple questions, Chris, from the chat. Dylan says, is Home Depot a play if people aren't buying homes, but they're upgrading their homes?
Not necessarily. I don't know how it's going to impact their business model, because their major customers are usually contractors. And the thing is, if people are not moving as much, maybe that there's more likelihood that you will see, you'll see people buying supplies to repair. But I don't know how it's going to impact them. I do know, however, that if you look at the report from who was it? The housing makers. Do you have your Fred open up right now? Go to Google, type in Fred, Fred.
Yeah, I got that.
And then go to single family housing inventory.
Okay. Housing inventory.
Or just type this in: new one-family homes for sale in the United States.
I think this is the correct chart. Let's see. Existing single-family home sales.
No, not that. Put in a new one-family homes for sale in the United States.
Okay. New one-family homes for sale. Okay, I got it.
Okay, now look at that chart.
Wow.
You see that?
It's going up.
So there's a lot of inventory that's kind of coming around and sitting around. And then when you add in kind of a lot of other housing, existing inventory, and a really, really slow sales cycle right now, you're seeing almost like an inventory buildup. And that inventory buildup is going to put a lot of downward pressure on price appreciation. And as price appreciation starts to come down, you're going to see owner's equivalent rent start to come down. So look at Fred and look at owner's equivalent rent. OER. So just type in OER Fred.
Yeah, put that up. We are at 418.2 November.
Okay, what you're looking at right there is just the index. But if you go to the graph, right, and you go to that little green button, that red button says edit graph, and then you go to, instead of index, just put change from a year ago, or percentage change from a year ago.
Okay. There we go.
Okay. So now do you see that sharp drop?
Yeah.
That's the thing to pay attention to, because that means that owner's equivalent rent, which is what the Fed uses to survey people, you can see that expectations are coming down significantly on what people are likely to pay in the future for rent, right? So a lot of this data is it's lagging data. So this is like the freight train that we have to be careful of, because if this keeps going in that singular direction and it doesn't stop at a certain point, what you're going to see is inflation, the numbers are going to actually come down significantly. Because one of the things that's holding up inflation right now, or making it quote unquote sticky, is the rate of deceleration in owner's equivalent rent, as a part of CPI.
So essentially, new homes supply is going up, but rent's coming down, and that is a recipe for shelter inflation to come down. That's your point.
Yeah, correct. So going forward, I'm telling you, there are certain parts of the country right now that there's a huge correction already underway. I mean, you look at Tennessee, Florida, and Texas, and I think like some of the other southern states that had the biggest booms during the COVID era. Right. A lot of places are having pre-COVID level inventories and actually deceleration in prices. And I think median prices are declining compared to what they were even in 2022. So
when do you think this data makes its way into the Fed's data dependency handbook? Like, when do they actually see it?
It lags about 11 to 12 months usually, but between 10 and 12 months depending. But yeah, that's the thing right now. So if you're looking at this data and it's saying 4.9%, which is what the thing is, I would say at this if you look at this scaled out, I think we're looking at probably like a 2% or less in 2026. I think a lot of the impacts are going to be felt in 2026, that deflationary pressure.
Dude, in 2021, we were at 2%.
Say that again?
In 2021, we were at 2%. In 2023, we were at 8%.
Yeah.
So it is
and
coming
you can
down.
see that usually, like prior to COVID, it was running about 3% on average.
Yeah.
For quite some time. But that was under a ZIRP regime. Okay, so zero interest rate policy. Imagine how much is going to come down during a 7-8% 30-year mortgage. I mean, there's not a lot of people that are going to be able to take on a 30-year mortgage with a 7.5-8% mortgage, with all-time highs in pricing of homes, even if the inventory is not as big as it is. The other challenge is the transfer of wealth from boomers to the younger people. So you've got boomers who basically have a ton of excess savings, paid off houses, and then at the other end, the people that are more likely to buy those homes are people that are some of the most indebted people in the history of the U.S. With student loans and all this additional liabilities. So this is a very, very curious thing. And then there's one last data point that we should probably look at, and that's the growth of the United States, like the total population.
I think we're at.
So if you go to just Google, type in total population of the U.S., one of the things that you're going to see is that since COVID, we've actually gone down significantly in terms of our total growth rate.
You're right.
The only reason why we've had positive, somewhat positive growth, like 0.5%, basically half a percentage point in population growth, is because of all the immigration, right? If it wasn't for immigration, we would have been in a much, much weaker state. And from what I can tell, demographics are not exactly in our favor, which pretty much means that if Trump were to go ahead with his, stronger border policies, you're going to see, number one, you're going to see people leaving the country, which is just how things are. But then you're also going to see a lot less entries, which means the total population growth is likely to decelerate significantly. And Japan and China basically have proven to us lower population equals lower growth equals lower inflation and possibly deflation, So if you look 5 years ahead, or if you're looking at a population change that's, no population change, or actually negative population change, hopefully not negative, but let's say no population change, what you're essentially doing is the population of the United States, the existing population, is going to be aging.
Yeah.
Right?
Yeah.
And so now, where's the growth going to be coming from? the only way you're going to do it is by productivity gains via something like AI.
Correct.
And if you think about it, all of that stuff is super deflationary. Like, people are forgetting that technology, one of the reasons why we've enjoyed such low inflation for the last 20 years is because technology has revolutionized things. So technology is very deflationary. So if I were to position myself going forward, I'd say be counter to what a lot of these people are saying in the open market. All they're doing is stoking the fears of inflation, but I think we're going to see the opposite. I think the country needs a lot less. We need a weaker dollar, but we also need lower interest rates. Otherwise, our federal deficits are going to keep growing also. So that's another thing. That's another benefit that Trump can actually get, is if he's able to lower the inflation rate down significantly and decrease the interest rates, that means that he can close the deficit as well.
Kris, first of all, this is fantastic analysis. I think it makes a lot of sense, and it creates a foundational understanding of where deflation is going to come from. Do you have any conviction still in the Trump Bitcoin thesis? And do you think day one, we get a surge from a reserve or a press release or executive order? What do you think?
Some people are saying that that's the way that he's going to weaken the dollar. I mean,
explain.
I don't know.
Explain. What do you mean?
I mean, if you're basically going out there selling US dollars and buying Bitcoin, that's going to strengthen Bitcoin, but at the same time weaken the US dollar, right?
Theoretically,
So that's one of the theories that's out there. I'm not sure. I'm not so sure how that dynamic even works, to be honest with you.
Dude, but that would be super cool, right? If the way to get the dollar to come down is to go long Bitcoin, because then all the Bitcoin people are happy, and then everyone who's invested in stocks are happy, right? Because the dollar comes down. I mean, that would be kind of cool if that's how it plays out.
Like I said, I'm hearing the thesis, but I don't know how it works mathematically, so I can't really comment on that. So
yeah, I also think you would have to buy a lot of Bitcoin to make that play out.
Yeah. The one thing I'll say is the expectations right now that the Fed has, that they're only going to cut one time, I think is complete bullshit. I think we're probably going to get 4 cuts this year.
Well, look, you've been very outspoken on this idea that you think we're getting more cuts, and right now the market doesn't agree with you. But I think, but in 2024, the market also got super bullish for cuts, and we didn't get them for 9 months. So the market's been wrong on cut expectations for the past 2 years, basically.
Yep.
Okay, last question for you.
That's how you're supposed to invest. You're supposed to invest counter-cyclical,
Agreed.
counter to what the market is telling you, because that's the only way you get a deal and you're making money. I'm telling you, there's a lot of great companies out there right now.
So that was going to be my last question. What is a screaming buy? Do you think there's any screaming buys right now to you?
Not in particular. The one that I've been looking at, and it's one that I made money on last year, is Verizon. You look at Verizon right now. Verizon's trading. What is it today? VZ stuff. Let me see. It's up a little bit today, but it's trading at $38. It's got a 7% dividend payment right now, which is a qualified dividend. A PE ratio of 16. Yeah, they don't have as much growth, but their cash flows are really good. And if we do get cuts, we're likely to see this thing go higher, right? Because now people are going to be chasing the yield, and it's safe. The other mechanism that's really good is that, let's say we do get a recession. Once again, Verizon is like a pseudo utility, right? Because the last thing you're going to do is who's going to cancel their cell phone plans because they lost their job? Yeah. Very few people. They're going to say, no, I'm fine. I'll keep this shit around, right? So that's one of the last things you're going to cut. So in which case now Verizon is going to get yield chasing, but then at the same time, a whole bunch of people jumping in for safety reasons because they're like, oh, I don't want to be in growth. I want to be in value.
Verizon's giving a 7% yield right now. It's not horrible.
Yeah.
Not horrible at all.
Yeah. Most of their debt is really far out debt. And their expenses are actually getting a lot more tamed, because most of the spending that they did over the last few years have been basically on spectrum acquisition, which now the acquisitions are complete. So now they don't need as much spectrum. So now they actually can focus their additional free cash flow on debt reduction, so it's just value accretive to investors.
Kris, last thing for you. All the quantum names are down upwards of 25 to 30% right now. Do you think these things go to zero? Or, I mean, these are now down almost 75% from the high. How do you think this plays out?
I mean, the challenge with a lot of these quantum names is just what Zuck and Jensen said. They're too far out, which means right now they're going to be burning capital. Now, where are they going to go for that money? Well, there's two ways companies can raise money, and neither one is value accretive to shareholders. One is by issuing more shares, right, to survive. That's one way. And the other way is by taking on debt, which right now at the current rates that you're going to be taking on debt, it's going to be like too high to maintain any sort of profitability. The thing is they don't have any products in the market, so I don't even know how these guys are making any money whatsoever. So I'd say be careful with these, with the quantum computing names. A lot of it was just hopium that was fed into the market by people. And, like the Google breakthrough definitely was a technological breakthrough, but it wasn't like, okay, it's a new business model that can be monetized anytime soon. So that's the way I see it anyway. So right. I don't know. I'm not in quantum. The one mistake that I would say is I didn't short it. I have a really bad track record when it comes to trying to short companies. And I haven't done very well. Like my recent shorting failure has actually been PayPal. Like after the whole honey thing, I was like, yeah, let me buy some puts on PayPal. And that shit did not work out. And so I sold out of it. And then the fucking thing kept going down. I was like, God damn it. Like, what the F, dude? Like the one time I actually have a decent confidence interval and something going down and it does start going down, I end up losing. So I was like, I don't know what it is, bro. Maybe I'm just bad. I just don't have luck when it comes to shorting.
Well, you have to have a consistent thesis, and when the stock goes against you, it's hard when you're short. Right? It's like,
no, you need to have balls. I don't have the balls for it. Like I will come up with a great thesis on why something should happen. I can be bullish on the long side, but the amount of risk that you're taking trying to short and going the other way it's too much for me. So I don't have the balls to short, and I should probably just stay away. If anything, the way I should position myself is if I think something is going to go down, I shouldn't short it. I should just stay out of it. That's it.
Yeah, it's fair. Yeah. All right, Kris, your Twitter in the chat. Everyone really enjoyed your analysis here today, so everyone can follow me there on Twitter, and we'll talk to you soon.
All right. Take care, guys.
Take care. Folks, we do have some breaking news. Although everyone doesn't love the politicians trading, we just got a politician who bought $30,000 of SoFi. It's been a long time since we saw a politician. The politicians have bought SoFi before, but it was like 2 years ago. It's been a while since they bought SoFi. He bought, who's this guy? The chair of the House Oversights and Accountability Committee. I love that it's the chair of the House Oversights and Accountability. Given the most people do not think any of these guys have any accountability when they trade. But $405,000 of equities he bought. He bought $30K of BlackRock, $30K of Costco, $30K of SoFi, and then he sold. It looks like he sold a little bit of Apple and Amazon. That's what it looks like. I don't know if that's exactly what I'm reading from the page, but he definitely bought $30K of BlackRock, $30K of Costco, $30K of SoFi. Those are the most notable names from the 390,000 of buys that he had today. So there you go. First time we're seeing some buys on SoFi. I think that's super bullish because, the politicians tend to stay away from, I don't want to say they stay away from financials, but if they get into financials, it's really like household name financials, like JP Morgan, more BlackRock, as he said, Morgan Stanley. They don't touch SoFi. Or PayPal or Affirm. They don't get into those names. So the fact that he picked SoFi, I don't know, maybe either he thinks Q4 is going to be good or he just thinks in general financials will have a tailwind, and SoFi is one of the more, I don't want to say cheaper financials, but financials that's growing way more than a Bank of America. And if they can keep up that growth, then they should be rewarded towards the end of this year. Biden approves student loan relief for more than 150,000 borrowers. Oh boy, that's a headline. Hold on. Now, how did he do this? Let's see how he did this. Yeah, the White House just said it. 150,000. So who are the borrowers? Because they can't just do it unilaterally. They have to do like a condition-based relief. It's probably like public employees, government employees, teachers, nurses, etc. Let me see if I can get specifics on this. This just broke 4 minutes ago. Who did Biden give this to? This has got to be some specific. There's no way it was just 150,000 random people. Yeah, we don't have any details yet. Oh, wait, hold on. Do we get it? Oh, yeah, we got it. Oh, so 85,000 people who attended schools that cheated and defrauded their students, 61,000 borrowers with a total of permanent disability workers, and another 6,100 public service workers. Okay. So basically, if you went to a school that lied to you about your degree, 85,000 of those people get some relief, 61,000 in disability, and 6,100 public service workers. Yeah, ITT tech type schools, those type of schools. There was a lot. I mean, I remember when I was growing up and I used to watch TV, there were a lot of commercials of these like online schools, and most of them were full of shit. So I guess the downside effects of those going into 2025. I mean, there's a generation of people that went to those schools. Seems like those are the schools that those are the people that are getting forgiven. Again, Biden ran on clearing $10,000 for everyone. I know this because I had $10,250 of student loan debt. I have $6,250 right now. And so I was like, all right, so if Biden takes away 10 grand, I pay $250. It never happened, and it was never going to happen because you can't unilaterally print $400 billion and clear out all the student loan. Actually, you could, but the Supreme Court stopped it. So, I mean, he was very close, and then the Supreme Court, I think it was a 6-3 decision. They said no. So it almost happened, but the Supreme Court was like, nah, buddy. And if he had did that would have been in 2023. You know, we barely got inflation down towards the end of 2024. I mean, $400 billion is $400 billion. That's like almost $500 billion. I mean, there's no way you could say that wouldn't be inflationary. Also, if people didn't have to make their student loan payments and they had an extra 20 grand, they could start spending instead of sending it to the government, which means that would create more inflation because people have disposable income to spend. So I definitely do think that if we had forgiven that much in student loans, it would have been more inflationary. Why aren't you paying it off? I am. I'm doing $600. I'm doing $500 a month. So by the end of the year, I'll have $6,000. But the interest rate is like nothing, dude. It's like, I don't even know what it's because it was paused for the past 4 years, and we're still in the 12-month period where it's still theoretically paused. That was the way Biden like lifted it. So it's like it's dirt cheap, the interest rate on the student loans. But by the end of the year, I should be done with my loans. Dude, I paid most of my loans. I messed up. Although I think I didn't mess up. I paid most of my loans senior year. Like, I remember writing a check for 15 grand, February 2020. If I had waited, and I didn't need to do it, but I was like, let me get it over with. Let me just like pay this. If I had waited 2 months, I would have got to keep that 15 grand for the next 4 years, because obviously rates got paused, or student loans got paused, and rates went to zero. But then again, I probably would have lost that 15 grand in the stock market. Like in 2020, if I had that extra 15 grand, I promise I would have lost it in the stock market. Like I would have done, so I'm actually happy I paid off that 15 grand. I remember it was like February 29th, 2020. And I was like, fuck it. Here it is, 15 grand. And I felt good about it. I felt responsible. I felt like an adult. I'm like, all right, I'm paying off my student loan. I felt like it's what I needed to do. And then for 4 years, no one had to pay. I would have absolutely gambled it away, bro. I would have put it in some stupid biotech or some calls. Like, dude, in 2020, when things were crashing, I think I had $8,000 to my name. I would have had 25 with that extra 15. But like, and then I lost the 8 grand too. So it's like, it just all went to shit, bro. All of it. All of it went to shit. My student loan is 1.5%. I'm paying this off as slowly as possible. Yeah, dude, unless you are the person that needs to see your debt go to zero to be able to move forward in your life, if you have a 1.5% interest rate and you kind of know what you're doing with your money, there's no need to pay it off that quickly. Like even Apple, bro, I have $2,300 on my Apple credit card because I bought a ton of Apple products, 0 APR for 12 months. Why would I give them $2,300? It's not like $2,300 is a lot of money, but it's just like if I can pay them $300 a month, I do not need to spend the other 2,000. I can do something else with the 2,000. So, mentally, I know some people benefit from it, but also it's really not worth it. Same thing with Tesla. I mean, I could pay off the Tesla in cash right now, but dude, 0% APR for the next 5 years, like, yeah, I'm gonna keep that 30 grand instead and do something with it. Is the stock market going to crash again? I don't have the answer for you, but definitely today, I wouldn't say this is a crash. It's a little bit of a dip. Quantum names are still getting hit, guys. I mean, this is bad. Like, this is not good. These were down 50% last week. They're down 30% again today. Like, this is a pretty epic collapse. And I'm just curious to see, do they survive? Do they dilute shareholders? Do they go out of business? What do they do? Like, if everyone's saying, no, there's a real thesis, it's not 15 years away, okay, so then something's got to happen to keep these stocks alive. And I don't think they go out of business, but they're going to need money, right? And like, if they don't have any cash and they don't have any earnings, then what are they going to do to get the money? So I think we're going to have to see. If I was a Quantum CEO, I would have diluted the crap out of shareholders like 2 weeks ago or even a month ago. And I don't know if they did. Someone can correct me if I'm wrong. But if I was Rigetti at 18, dude, I would have issued like 1 billion shares. Like, I don't care if the stock crashes. I'll raise a couple $1 billion or at least a couple $100 million, and I'm chilling. I would have diluted as much as that's what GameStop did at $60. Or sorry, it was at 47. GameStop at 47 raised $2.5 billion. Now the stock's at 31, so whoever bought those shares at 47, sorry, but GameStop's in a nice position just financially. 28% of their market cap's cash. And they can do something with it if they need to. So I guess we're going to have to see how this plays out. These are way better prices for us to buy. They were trading for pennies 2 months ago. Yeah, I mean, again, that depends if you believe in quantum. I mean, yeah, there's no disagreement. It's way better to buy Rigetti at $6.50 versus $18. But the question is, does it deserve $6.50? You know? I don't know. I think we're going to find out soon. Google lit the match on quantum and it caught on fire. Yeah, 100%. Google definitely helped to start this off. What else do we have? Do we have any other crazy headlines? Fear and greed are still at 26, just almost on extreme fear. We saw that politician bought some SoFi. That's one headline. Again, we talked about the NVIDIA stuff this morning. They blasted the Biden administration. Greenland Prime Minister, we would like to work with the U.S. on defense and mining. Huh. Okay. Maybe. Maybe we make some deals. Maybe. Dude, if Trump pulls off something with Greenland, that would be crazy. It would absolutely be crazy. Oh, here's some updates on Tesla. Tesla has officially overtaken Audi in global car sales for the first time ever. Audi sold 1.67 million vehicles in 2024, down 12%. Tesla sold 1.79 million. Deliveries of Audi's fully electric vehicles declined 8% globally to around 164,000. There you go. I don't know if Tesla holds 390, but it does feel like they are going to be some of the biggest winners in this upcoming AI revolution. And again, Kris's analysis there was really spot on about AI being deflationary. 1,000%, dude. Like, if we have a population decline, which we're seeing it in the numbers right now. I mean, even how many of you guys have said in the chat before that it's just really expensive to have kids? I've heard this from a lot of people. It's expensive to have kids. And if it's not getting cheaper and net worths aren't going up because most people don't invest, so most people can't live paycheck to paycheck and actually have a kid, well, we're going to have lower population. If we have lower population, how is Facebook going to grow? They need to increase margins. How do they increase margins? They have to spend on AI or they have to replace workers with AI. That's deflationary because people lose their jobs, which is good for Facebook stock to an extent because if people lose their jobs and they don't have money, they can't buy stuff, which means advertisers might not advertise on Facebook. But nonetheless, there should be enough productivity gains to make Meta more valuable. But like, there are deflationary tailwinds that Kris is right about that are coming. And this whole idea that we're not going to cut, we're going to have 10 years above 5 and 6%, it does feel like it's kind of a prisoner of the moment thing versus looking at all the deflation, even that China's exporting to us. And that we're going to have to see. Ty says it has always been expensive to have children. People always find a way to make it work. That's fair. I mean, it's not like it's always been cheap. It's just we are seeing in the raw population numbers of the United States that we are not having as many kids as we did. Like millennials are not having as many kids as the boomers did. That's just like a fact. Which means Gen Z, are they going to have as many kids as millennials? I think the new one is Gen Alpha or Beta. Are they also? I mean, I saw this over the weekend. I think we've talked about it in the past, but one of the most popular use cases for humanoid robots, believe it or not, is sex robots. And there was this sex robot at CES that was getting a lot of coverage. I mean, dude, at the end of the day, if this is what's going to happen, like if this was one of the big products at CES, is Gen Alpha going to let go of human-to-human physical touch? Who knows, right? But nonetheless, these will be deflationary if it affects population growth. I said that last week. Yeah, a lot of you guys have been saying this. I mean, this is a real thing, bro. It's a real thing. Sex robots are going to be banned in lots of countries. I feel like at some point, bro, if that's really where people go for physical interaction, and if it's just one of those things where it's like, is that going to be the? I mean, what if Optimus? What if Tesla makes a version of Optimus that is marketed in a certain way? I mean, I don't think Tesla is going to try to do that, but who knows, dude? What if it's a big market opportunity? Like, the point is, there's a lot of deflation that is on the horizon, even if it's not this year, and it's something that's going to get the Fed to lower rates. Also, the freaking $1 trillion we're paying in interest on our debt should get the Fed to lower rates. Rocket Lab's down 11%, folks. It looks like this is either pure volatility or from Blue Origin. But 11% is pretty aggressive today on Rocket Lab. It's pretty aggressive. The comments are great. Humanity's trying to, as hard as possible, to expedite its own demise. I already told you guys a couple days ago, I don't think we're getting to the year 3000, bro. I don't think that's happening. I think if you're alive right now, enjoy it, bro. I mean, we probably get to 2100, maybe 2200, but the year 3000, bro, for us to last another millennium, and this has happened in the past. Human civilizations have been alive, and there's been natural disasters to take them out, and then alive again, and then there's all this stuff. We've had waves of human populations. One could argue that we had way more populations than we even know about, given all the different natural and sort of weird explanations we have for certain things that exist on this planet. You could only argue either they were done by aliens or advanced human populations that inevitably got killed. I don't know if we make it to the year 3000 with all the shit we've got going on. And my thesis for that is more geopolitical instability. It's not really AI, which, I mean, AGI could be the thing if, AI takes over and they want to kill us. DJT up 12%. But my thing is more so, I don't know if Russia, China, and the United States for the next 1,000 years are going to get along. And if they don't, I mean, you never know how that one plays out. What happened to the Blue Origin launch? It was scrapped at the last minute. I don't know why. I still don't know why, but it was. And I feel like that's hurting Rocket Lab. That's my only reason. Austin Powers was ahead of its time. Correct. Austin Powers was definitely ahead of its time. Tries to short 2200 spy options. Dude, by the year, we only have, guys, this game we're playing in the stock market, it only has, realistically, 124 years of data. And no one really looks at 1900 to 1950. I mean, we look at it, but 1950 to 2024, so that's what, 74 years? We only, call it 3/4 of a century of data to know how stocks actually perform. That's why so many people are afraid of the market, because everyone thinks it's this like weird thing that you put money into, you never know it's going to come back. Then when you really get into it, there's a lot of trends you can look at historically to generally say, okay, if you invest in the S&P 500, the best 500 companies in the world, you should get 7 to 8% a year. But we only have 75 years of data. Imagine when we have 1,000 years of data, if we survive that long, on how markets operate. I feel like the traders in the year 3000 should have so much better data on how to navigate the nuances of the market. The Jonas Brothers said we would. Yeah, the Jonas Brothers did say we would, but unfortunately we're not there. Do you think AI will destroy self-investing? No, not at all. I mean, robo-advisors will be there, but I think people want to manage their own money, bro. Like, AI will be a tool to get, more insights on how to invest, but I really don't. I would not feel comfortable giving some robo-advisor algorithm my money and just say invest it for me. Granted, I said that about self-driving and then, things changed, but I kind of like my own. Money's different, dude. I feel like you want to control your own money. Like, and you're fine with getting advice, but you don't want the thing to just do stuff for you. Because at the end of the day, you kind of want to feel in control of buying and selling, and you live with the results as an independent human being. Celsius down about 1%, Palantir down 4%, 64.50. So I don't think it'll destroy investing. Rango says, do you think markets will be more efficient in all these 2 to 3x moves in a year gone? Rango, are you talking about with AI robo-advisors, or are you talking in general based on the current macro situation? Are you asking if the stocks that have 2 to 3x over the past year, are they going to go away? If it's from, I think you're asking for the robo-advising. If that's the case, yeah. If markets are more efficient, theoretically, like Robinhood at $7 shouldn't have been at $7. Robinhood's now at 40. So that 5x from Hood in an efficient market isn't supposed to happen, right? Because everyone's supposed to know that Hood shouldn't be $7. It's a good point. It's a good point. If we are that efficient, if robots are trading everything, like artificially intelligent robots, not just the high frequency algorithms we have right now, theoretically, things should never get that oversold. Big data is going to outtrade you every day of the week down to the millisecond. Yeah, look, that is a good point. I can't argue with that. I can't argue. That is a hell of a point. When we have AGI to the level of ChatGPT 20, like, why would anything never be at its fair value? Because then the whole reason Robinhood went to 7 or Palantir went to 6 or Tesla went to 100 is because of human emotions. And when those, yes, earnings took a decline, but did they take a decline to the point where Robinhood should have been trading at an $8 billion market cap with $6 billion in cash? Maybe not. Probably not. So an efficient algorithm probably wouldn't never let Robinhood get to that level, which means the asymmetry in the gains based on the human emotions of people getting upset about GameStop, maybe those don't exist in 30 years or 30 months, who knows? But I don't know. I still think people are going to have to trust those algorithms, and if they don't trust it long term, then it might be hard to easily give their money to them. What else do we have? Erwin says, as someone who works in high net worth finance, robo-advising will not replace real financial advisors for a long time. Yeah, I do agree with that. I think high net worth individuals are not going to, give their money to a robot. It's just a question of if the banks and all these Wall Street firms and these quant firms start using AGI in their algorithms, which I'm assuming they're already using AI in their algorithms to an extent. If they hypercharge that, at some point, maybe high net worth individuals also have to reconcile the fact that whatever advice they're getting from a human can never beat Susquehanna's AGI algorithms. I don't know. Because the whole point of advising, we talked about this last night, why do these analysts get paid money and they're saying sell your large caps, buy small caps? Because it's a little bit different than buying Amazon. If you buy Amazon, you tell your clients to buy Amazon, they're gonna be like, why am I paying you, right? Give me a new idea. And so if this entire business is based on the merit of new ideas that then proliferate into different counterparties working against each other, which is the whole point of the stock market, someone buys, someone sells, and a lot of that's based on your perception of the idea working versus your emotions around trading the idea. If all that's stripped away and it's just algos, I think it kind of makes the stock market not that fun, to be honest, but also maybe we do become so unbelievably efficient long term. Tax advice is going to be run by an AI. Dude, okay, so again, everything I'm about to say is not tax advice, but if you go into ChatGPT and you say, hey, I made this much money, I live in this state, I have these deductions, I have this solo 401k deduction, I have this sales tax that I have to pay in this certain area, I took this $7,500 EV credit, I'm going to give you, and then you give that data, and then you say, hey, I'm going to give you some hypothetical scenarios of what my income is going to look like and what I think my deductions could look like in 2025. And you just pour it into ChatGPT. It gives you not only the answer, it gives you such detailed answer, and it cites its sources on how to get these numbers. It's not BS at all. And I remember 2022, ChatGPT was horrible with numbers. Now it's like, oh my God, like I'm literally only paying the accountant to file the form for me. And like I'm sure the accountants like using, the IRS has a specific proprietary software. But the point is, if you need to estimate your taxes right now and you have a decent understanding of how much short-term capital gains you have and deductions, yada, yada, I mean, GPT can kind of give you the number. And it really helps with planning for the future, because then if you think of what things I can expense or how much more money I can make or what losses I need to take, it really is. So I do agree, by GPT-7, GPT-8, this shit's going to be at a different level. And when it gets that good, it should increase margins, but potentially can, replace certain roles that we might not need. You need an accountant to wet a signature. That's all you're paying for. Yeah, basically. Because I went to my account the other day. I told you guys, and I said, hey, this is what I think I'm going to pay. And he looked at all my numbers. He was like, yeah, that's pretty accurate. And I was like, well, I didn't tell him this, but I was like, dude, I didn't come up with that number. ChatGPT gave me that number last night before the meeting. So it's like he really, he's not telling me anything special. He's just like he's giving me peace of mind. That's what he's giving me, peace of mind. And I guess, people will still pay a premium for that. Amit, would you be okay if the Algo AI trade assistant always protected and never let you lose more than 2%, yet it would always auto sell at 5%, taking away large losses but gains as well? Right now, I don't know if I would be okay with that, but when it gets good enough to actually execute at that, yeah, that's pretty cool, right? It's like a stop loss on steroids. It's like imagine you could input as many variables as you want into an algorithm, and then it's efficient. So it makes sure to always cap your losses, cap your gains, etc., and give you an opportunity. But then again, part of the reason people have so many amazing gains on Palantir is because they held. So would the algorithm say when Palantir's trading at a 23 times price of sales, if the median sector for software is 12, that it's 50% overvalued, so you should sell it? Yeah, because and then you would have missed the run to going to 80. But then again, does the run to 80 happen if everyone's selling it at the most efficient time possible? And if everyone's selling it at the most efficient time possible, who the hell's buying it? So there's a lot of questions that this brings up. And I guess over the next couple of years, we're going to see how that plays out. What else do we have going on in markets? I think we're going to end it here, guys. 3 hours and 10 minutes. We're ending in just about 12 p.m. here on the East Coast. 91,000 on Bitcoin, Robin at 38.72. Things are still going down, but they're not collapsing. S&P, are we still down 0.85? We are down 0.75. Not too bad. Still haven't hit the pre-market lows on the S&P, which is nice. And Bitcoin, although it went to 89, got back up to 93. Now back here at 91,248. Yeah, Rocket Lab down 11%. I'm still confused why it's down this much, bro. That feels like it's kind of aggressive, bro. Now it's down 12%. But that one is down. Okay, so we're going to end it off with word of the day and this clip. I said I would play this clip, so let me play this clip. For all the new members of the channel who have never heard this, enjoy. This is, I got to post this again on Twitter before PayPal earnings. We post this every year now before PayPal earnings. This is, I think all the emotions of the market are captured in this 2-minute clip.
We'll get there eventually.
3% up. 3%. 3%.
Holy crap. Holy crap.
It's popping.
Holy crap.
4%. 5%.
Holy crap. Holy crap. Holy crap. 6%. 6%. Holy crap.
Oh, it's 67. I'm trying to get the numbers.
7.5%.
Let's fucking go.
No, that green candle is going to go pop up right now, bro. 8.5%. 8.5%.
What did they announce?
9%.
I'm trying to get this great. They had to announce something, dude.
9.3%.
9.5%.
10%.
10%.
10%.
Okay, so we got Andrew. They beat revenue by about 40 million. Okay, so we got that number. Okay, here we go. They beat EPS by about 15 cents. I got it. They beat revenue by about 130 million. So there you go. You got to beat on the EPS and you got to beat on the revenue. You got to beat on the EPS. You got to beat on the revenue. And then the guidance numbers should be coming in very soon. And then the street will be able to react to that as well. Oh, we got to ring the bell for this, Adam.
Bro, it's going back down. Now it's even. People are not liking it. Now it's down. 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 What the fuck? Down 5%?
How the fuck is this happening?
Bro, I have no idea.
You know
what's
the
happening,
Joker?
bro.
You know the Joker in The Dark Knight where he just starts laughing and then Batman keeps punching him and he keeps punching him and he just keeps laughing because all you can do is laugh? Dude, it was so bad. It was so bad. The funniest part of this clip will always be at this moment. You see how I start ringing the bell right there? You see me saying, oh, Adam, we got to ring the bell. Adam's ringing the bell with his hand, ringing a fake bell. But you see how his face is not smiling? You see how I'm smiling ringing the bell? And Adam starts ringing his fake bell, but his eyes are over looking at the stock falling 7%. And he's ringing the bell knowing that he's about to tell me, because I haven't looked at the stock, that we're down. And so I'm happy ringing the bell. He's sad ringing the bell. And then we get into the epic collapse of PayPal going to $49 after being up 10%. So it is what it is. It is that is the clip every year we have to watch before PayPal earnings. It was great though. It was a fun clip. It went viral on Wall Street Bets. One of you guys posted it. And dude, we got clowned on Wall Street Bets. We're like, these guys are the problem with our generation. So degen. Like, it wasn't really degen. We were just happy it was going up, and then it didn't go up anymore, and we were sad. Like, it was, that's what it was. It's not like we were YOLOing PayPal calls for, expiring the next day, but it was a string of emotions that we all feel. This is what happened to Nike shareholders as well. Nike went up, I think 9%, and then I don't know what management said, and it just collapsed a couple weeks ago. All right, word of the day, boo book. I hope I'm not saying this word wrong.
Boo book.
I feel like I said it wrong. Boo book. A small reddish brown spotted owl. The researchers set up cameras to observe the nocturnal habits of the boo book. A friend to farmers, the boo book helps to control the rodent population. I don't even know how to use this word. A small reddish brown spotted owl. Yeah, all I'm seeing is boob in this word, to be honest. That's like, call me a child if you. All I'm seeing is boob. That's all I'm seeing. All right, that's it for me. We'll be back at 3:45 p.m. Eastern Standard. We don't have any earnings today, but we'll see kind of how this market turns out, and then we'll keep going from there. We got a big week, busy week, PPI, CPI, tons of earnings starting, I think, tomorrow. Wednesday is going to be a big day, but tomorrow we have Applied Digital, which is one of the semis names, and then Wednesday, Thursday is going to be very, very big for the banks, TSM, and we'll continue to see where this market goes. All right, everybody. We are done with the market open. Please suggest me new sounds. Even on Twitter, DM me. I'm filling this up with as many fun sounds as we can get. So please make sure to send me an idea if you have. Also, for the people going to the New York meetup this weekend on the Saturday the 18th, I began sending out Telegram invites. So just watch out. You're gonna get like a text message from me on iMessage or wherever your phone number, however, it'll be on your phone. It'll be either from iMessage or it'll be from my number, and it'll be an invite to the Telegram group chat. And then in that group chat, you'll get all the details. So if you have iMessage, it'll come through my email. If you have Android, it'll come through my regular phone number. And then you'll get the details for the Telegram group. Most likely the timing, again, is going to be 12 p.m. to whenever in New York. I hope it's not that cold. I mean, it's been kind of okay. Let me check the weather, actually. How bad is it going to be? Weather this week. Because if it's like 40 degrees, is not the... Oh, damn, it's Saturday. It's raining, bro. It's raining and snowing? Goodness gracious, bro. The one day. All right, we'll see. We'll see how bad this is. I mean, if it's that bad, I don't know. Maybe we delay it. I really don't want to, but if you're in the Telegram group chat, you'll get all the updates. So if it's really that bad and there's no point of it, then I'll issue an update and you'll see it. And maybe we delay it till next Saturday, but if not, then maybe it's okay. Damn, dude, why is it raining and snowing only on Saturday? That's so annoying, bro. The whole week is fine, and then Saturday is the rain and snow. Although Saturday is going to be hotter than the other days. It'll be 47. The rest of the days will be 34, so it'll actually be technically warmer. Also, it's a 20% chance of precipitation, which means
maybe it's not that. Maybe it's gloomy, but maybe it's not super, super freezing rain or snow. So we'll see. All right, that's it. Thank you, everybody. 3:45. We'll be back with the market open. Bye, everyone. Have a good one.